Very good evening to all of you.
Thank you,
Good evening, sir.
Good evening, sir.
Good evening, sir.
Good evening.
Good evening, sir.
Good evening, sir.
Good evening, Kanna. Good evening. அனைவருக்கும் என் அன்பான வணக்கங்கள். For coming examination, what are all the theory we have to supposed to refer? We have a quick revision. It's a revision section only. So, if you have my textbook, you can keep it in your hand so that you can underline and you can study also. Or you can view the screen also. I have compiled all post exam FAQs so that it may be useful for your better revision. Importance of the theory, the last one question, guaranteed one question, post exam theory, repeated theory only they are asking. Many students used to skip the theory part. If you are going to skip the theory part, then the entire question paper is going to become compulsory question only. Right? Choice question. If any one of the topic, any tested question, high voltage question, if you are not able to understand that question like capital budgeting or leverage analysis, either question get on. The theory part will help you. Therefore, don't skip the theory part. We'll quickly revise the post exam questions. Now, with respect to financial management introduction, there are two basic aspects are there in the financial management. One is called procurement of fund, another one is called effective utilization of fund. These are all the two basic aspects with respect to financial management. Procurement and effective utilization of fund. Yeah. Is it okay? Highlight pannaka. Yeah. So, procurement and effective utilization of fund. These are all the two basic aspects of financial management. Procurement of fund, either by way of own fund or by way of borrowed fund. Own fund or borrowed fund. Own fund either by way of equity share capital or by way of preference share capital. Borrowed fund either by way of long-term loan or debentures. With respect to procurement, there are two basic aspects. One is procurement of fund, another is effective utilization of fund. Before you are going to procure the fund, you have to analyze the characteristics of source of fund. There are three characters are there: risk, cost, and control. With respect to risk factor, risk with respect to risk of repayment is called risk. Risk represents what? Risk of repayment. In the sense what? Risk factor is high, whether it is own fund or borrowed fund, based on repayment. Borrowed fund means any given point of time you have to repay. Own fund means there is no question of repayment of own fund. So, all YouTube viewers, is it possible? Are you able to view the screen properly? Yes, kindly put the thumbs up now. Or okay. Is it possible to view? Muthu, check பண்ணிக்கணும். YouTubeல சரியா இருக்கான்னு பாரு.
Screen marvelous.
Black screen. Now we cannot see, sir. It's only black is there.
Only black screen.
எங்க YouTubeலயே நம்ம கிளாஸ்.
நம்ம கிளாஸ்ல இப்ப தெரியுது சார்.
Zoom okay, sir.
Zoom okay, clear.
Not போயிடுச்சு sir.
திரும்பி போயிடுச்சு சார்.
It's okay now?
Yes, it's yeah.
Yeah. So, procurement and effective utilization of fund. Procurement either by way of own fund or borrowed fund. Before you are going to procure, you have to analyze the characteristics of source of fund. What are all the characters are there? Risk, cost, and control. High risk with respect to risk of repayment. High risk goes to which fund? Borrowed fund. Borrowed fund is riskier than own fund based on repayment. Because in case of own fund, there is no question of repayment. Whereas borrowed fund, any given point of time, you have to repay. Cost, high cost goes to which fund? Own fund is costlier than borrowed fund. In case of own fund, there are two main reasons own fund are costlier than borrowed fund. Own fund means cost to the company called dividend. Borrowed fund means cost to the company is called interest payment. So cost of own fund is always higher than cost of borrowed fund. The two main reasons are, in case of own fund, there is no what are that called, tax benefit. Another one is dividend expectation of the shareholders are always higher than interest expectation of the loan holders. Therefore, own fund is costlier than borrowed fund. With respect to control, dilution of control will be there in the own fund, whereas borrowed fund, company have the better control over own fund. When compared to own fund, borrowed fund, company have the better fund. These are all what? Three different characteristics of source of fund. Then the two main basic aspects of financial fund, one is called procurement of fund, and one is called the effective utilization of fund. With respect to effective utilization of fund, we have to use the fund properly and profitably. We have to use the fund proper as well as profitable manner, because procurement itself involves some cost. Nobody going to give the fund at a free of cost. So we have to use, whenever you are going to use the fund, we have to do cost benefit analysis. How much the cost of the procurement? How much the benefit out of the procurement? That cost benefit analysis you have to do. And who is responsible for making use of the fund properly? Finance manager's responsibility. He has to verify if there is excess fund, if there is idle fund, if any. That fund, they have to make use of the fund. At least we have to invest in short-term security, short-term investment, so that we'll get some interest income out of that investment. So this is called what? Effective utilization of fund. Two basic objectives of financial management. One is called profit maximization, another is called wealth maximization. Profit maximization is the short-term approach. Wealth is the long-term approach. Ultimate aim began doing the business itself, wealth maximization. So earning profit is a must one, whereas earning wealth is the best one. Therefore, wealth maximization is more important than profit maximization. All are comfortable, my dears?
Yes, sir.
Next. With respect to CFO, functions of CFO, Chief Financial Officer, very frequently asked question. There are 5 major functions are there: planning, source of fund, working capital management, capital budgeting decision, and risk management. These are all what? 5 major roles of CFO. If you want to do the business, first you have to do plan. Thereafter, you have to worry about source of fund. After getting the fund, one hand you have to invest in short-term investment, another hand you have to invest the fund in long-term. Short-term investment decision making is called working capital. Investment in long-term is called what? Capital budgeting. So whenever you are going to do the business, we know how to make. We have to face the risk factor. So you have to know how to manage the risk. Therefore, if you remember this, you can able to understand that what roles of financial CFO. What are the 5 major roles of CFO? Planning, source of fund, working capital management, capital budgeting, also called investment decision, and risk management. All are comfortable, my dears? In addition to that, what are the 9 emerging issues which affect the future roles of CFO? Globalization, stakeholders management, strategy, technology, transformation, talent and capability, regulation, risk, and reporting. These are all what? 9 emerging issues which affects the future roles of CFO. Mnemonic for the same, it's a very frequently asked question. Mnemonic for the same: GSTR, GST return, G, 1G, S square, 2S, 3 cube, R cube. So that you can easily remember. G, S, T, R. Okay. G for globalization, S for stakeholders management, again S for strategy, technology, transformation, talent and capability, regulation, risk, and reporting. So if you want to become a CFO, the 5 traditional major role alone may not be sufficient. Whatever we discuss, the 5 major role, that alone is not sufficient. Nowadays, what are the other challenges CFO has to face? For that, the 9 points you have to remember. So you have to remember the GSTR. Difference between financial accounting and financial management. With respect to financial accounting, always accrual basis. Accounts is always accrual basis. Whereas FM, financial management, cash basis. With respect to financial management, financial accounting for the purpose of collecting the information, collecting the data for the purpose of reporting purpose. Whereas financial management is for the purpose of decision-making purpose. So where financial accounting ends, financial management start. Financial accounting, financial accounting will start. Then the next important question, agency cost. With respect to agency cost, if I am the sole proprietor of the company, owner of the business, I'll have proper cost reduction, control cost reduction techniques and all. Where and all possible will minimize the cost. Whenever I go out from the room, I will switch off the AC, switch off the fan, or switch off the lights. Because my company or what, my concern, my industry, my shop, I may have some responsibility. If it is a corporate, then I'll do my duty, work, then I'll walk out from the place. I don't have the habit of switch on the AC or switch off the lights and all. It's somebody's responsibility. In the sense, if corporate comes into picture, every individual will do their work only. They won't bother about other work. They won't bother about overall minimization of cost. Therefore, to monitor the same for the purpose of controlling the cost, we are going to incur additional cost. Is called agency cost. Cost of குறைக்கிறதுக்காக இன்னொரு cost allow பண்றோம். That is called agency cost. So the 4 types are there. One is monitoring, bonding, opportunity, and structuring. These are all the 4 types of agency cost. So the first paragraph is more useful for the purpose of agency cost preparation. Haripriya, kindly read the first paragraph. You can easily understand agency cost.
Yes, sir. Agency cost. In a sole proprietorship firm, partnership, etc., owners participate in management, but in corporate, owners are not active in management. So there is a separation between owners, shareholders, and managers. In theory, managers should act in the best interest of the shareholders. However, in reality, managers may try to maximize their individual goal like salary, perks, etc. So there is a principal-agent relationship between managers and owners, which is known as agency problem. In a nutshell, agency problem is the chances that managers may place personal goals ahead of the goal of owners. Agency problem leads to agency cost. Agency cost is the additional cost borne by the shareholders to monitor the manager and control their behavior so as to maximize shareholders' wealth. Generally, the agency cost is of 4 types: monitoring, bonding, opportunity, structuring.
Good. Now you understood, Kanna? So, agency problem. First, they should talk about what? Agency problem. What is called the agency problem? Like sole proprietorship, in case of corporate, they may not have the proper control over the cost because owner is not participating. Therefore, that problem is called the agency problem. To control the cost, we are going to incur some additional, some manager, some supervisor has to manage, somebody has to monitor to overall cost minimization. Further, we are incurring the cost. That cost is called agency cost. All are comfortable? Next.
Yes.
What are the different?
They will appoint, they will appoint separate persons to monitor, or within the organization itself, they are employing the person to monitor the things. Managers money
Yes,
appointment
within the organization only. Within the organization. That person is separate.
Not outside persons will come and monitor. Okay.
No.
Okay.
Even one person, if I'm going to appoint, that's additional cost to the company for the purpose of minimization of cost, other cost.
Okay, sir. Thanks.
Next. YouTube சரியா தெரியுதான்னு பேரலா பாத்துங்க யாராவது யார் பாக்குறீங்கப்பா? YouTube live also going properly or not? Kindly verify.
நான் பார்த்து தான் சார் இருக்கேன். கரெக்டா தான் சார்.
கரெக்டா இருக்கா? விசிபிலிட்டி இருக்கா கண்ணா? ஸ்கிரீன் ஷேரிங்லாம் விசிபிள் தெரியுதா?
இருக்கு சார்.
Nobody is visible, am I right?
Yes, sir. Visible.
Okay. Next.
Yes, sir, it's good.
Thank you, Kanna. Next. The next important question. All the question I taken from past examination or RTP or MTP. Okay. Financial distress and the financial insolvency. So easy way to understand the financial distress. Financial distress is a temporary problem, whereas insolvency is a permanent. Okay. So long term with respect to what? Long term problem. Thank you, Stevenson sir. So there's a financial distress and a financial insolvency. That is what insolvency. Financial distress, after COVID, we are unable to pay salary to the workers, or we were not able to pay the rent properly. Some hiccup has happened. Shortage of cash was happened. That is called some disturbance in the finance. Adequate liquid cash is not. The liquidity portion got affected. That is called what? Financial distress. Inflow and outflow of cash got affected. But if it is continuous for the over the period of first year also financial distress, second year, third year, it's continuously is happening mean, then it leads to what? Winding up of the company. Then it is called what? Insolvency. Got the clarity, my dears? Understood the difference between financial distress and financial insolvency?
Yes, sir.
Yes, sir.
Okay. Quick யாராவது படிக்கிறீங்களா? Niharika, kindly చదవండి.
Financial distress and insolvency. There are various factors like price of the product, service, demand, price of inputs, example raw material, labor, etc., which is to be managed by an organization on a continuous basis. Proportion of debt also needs to be managed by an organization very delicately. Higher debt requires higher interest, and if the cash inflow is not sufficient, then it will put lot of pressure to the organization. Both short-term and long-term creditors will put stress to the firm. If all the above factors are not well managed by the firm, it can create situation known as distress. So financial distress is a position where cash inflows of a firm are inadequate to meet all its current obligations.
So that particular line is important. So financial distress is a position where cash inflow of the firm are inadequate to meet all its current obligations. Whatever the inflow of cash may not sufficient to meet out the obligation of the company. That is called financial distress. Continue.
Now, if distress continues for a long period of time, firm may have to sell its asset even many times at a lower price. Further, when revenue is inadequate to revive the situation, firm will not be able to meet its obligations and become insolvent. So insolvency basically means inability of a firm to repay various debts and is a result of continuous financial distress.
Good. Okay. With respect to financial need, sources of funds. The source of fund broadly classified into three types: long-term, medium-term, and short-term. Okay. It's a means of procurement of fund or way in which I'm going to get the fund. That is called source of fund. Okay. So in the sources, long-term or short-term or medium-term, it's purely based on maturity of when I'm going to repay the money. Based on that only, what the maturity period only we are going to classify as long-term or short-term or medium-term. In general, long-term represent more than 5 years. Medium-term represent 3 to 5 years. And what? Short-term represent less than 1 year or less than what? 1 year. Even what? More than 1 year and up to what? 5 years also going to consider as a what? Medium-term. Now, you know various sources. Long-term sources in equity share capital is the best example. Medium-term means debentures or preference shares is the best example. Short-term means a trade credit, commercial papers, okay, even the factoring, these are all one example with respect to short-term sources. In addition to that, the source of fund broadly classified into internal source and external source. External source, you know, I'm going to get the fund from outsiders by way of equity share capital, by way of preference share capital, by way of long-term loans or debentures are called the external source. Internal source, earned profit will be there. The retained earning, that is also one of the source of the company. That is called one internal source. Then, advantages of raising fund by way of equity share capital. Such a simplest question. You know, if I'm going to issue the equity share capital, there are +2 questions. Am I right? What is the advantage? Equity share capital means I don't need to pay immediately. Am I right or not? The repayment may not going to come. I have to pay dividend only if the profit earned by the company. Company has to pay dividend only if there is a profit. Are you able to follow? Therefore, the riskless way in which I am going to get the fund from the company called equity share capital. Muthu, kindly read advantages of raising fund by way of equity share capital.
Sir, very படிக்க
Advantages of raising funds by issue of equity shares. It is a permanent source of finance since such shares are not redeemable. The company has no liability for cash outflows associated with its redemption. Equity capital increases the company's financial base and thus helps further the borrowing powers of the company. The company is not obliged legally to pay dividends. Hence, in times of uncertainties or when the company is not performing well, dividend payments can be reduced or even suspended. The company can make further issue of share capital by making a right issue.
So all are easy points only, no?
Yes, sir.
Similarly, preference share capital, that is also +2 level question only. What are all the these are all post exam questions only. Okay, they'll ask for the 2 marks. Preference share capital. Continue, Ganna. What are the advantage of preference share capital?
Advantages of rising funds by issue of preference share capital. No dilution in earnings per share on enlarged capital base. There is no risk of takeover as the preference shareholders do not have voting rights. There is leveraging advantage as it bears a fixed charge. Preference dividends are fixed and pre-decided. Preference shareholders do not participate in surplus profit as the ordinary shareholders. Preference share capital can be redeemed after a specified period.
Then various types of preference share: cumulative preference share, non-cumulative preference shares, redeemable, participating preference share, non-participating preference shares, and convertible preference shares. The difference between equity and preference shares. Yeah, read Kanna. Equity share capital versus preference share capital.
Difference between equity share and preference share. Basis preference dividend, equity share. Equity dividends is paid after preference dividend. Preference share. Payment of preference dividend is preferred over equity dividend. Rate of dividend.
You have to pay dividend for the preference share capital, preference shareholders. Thereafter only you have to pay dividend for the remaining money only we can pay for equity share capital.
Rate of dividend for equity shares it's fluctuating. For preference share it's fixed. Convertibility, equity shares are not convertible. Preference shares are convertible. Voting rights.
Converting to equity share. Yeah, preference share capital. The preference shares we can have the option to convert into equity shares.
Voting rights. Equity shareholders enjoy voting rights. Preference shareholders they do not enjoy. They do not have voting rights.
Next, debentures. With respect to debentures, non-convertible debenture, fully convertible debenture, partly convertible debenture. These are all various types. In addition to that, bearer debenture, registered debenture, mortgage debenture, naked debenture, redeemable debenture, and non-redeemable debenture. These are all various types of debentures. Then, what are all the advantages of issuing debentures? Yes, great part. Advantages of issuing debentures.
Advantages and disadvantages. Advantages of debentures. The cost of debentures is much lower than the cost of preference or equity capital, as the interest is tax deductible. Also, investors consider debenture investment safer than equity or preferred investment, and hence may require a lower return on debenture investment. Debenture financing does not result in dilution of control. In a period of rising prices, debenture issue is advantageous. The fixed monetary outgo decreases in real terms as the price level increases.
Good, Kana. Disadvantages?
Disadvantages of debentures. Determining interest and capital repayment or obligatory payments. The protective covenants associated with a debenture issue may be restrictive. Debenture financing enhances the financial risk associated with the firm. Since debentures need to be paid up during maturity, a large amount of cash outflow is needed at that time.
The last 2 points is more important. It leads for financial risk associated. In the sense of what? Whenever I have to pay debenture, whenever I'm going to get the debenture, I have to pay interest on debenture. So if you want to pay interest, I have forced to earn profit. At least for the purpose of making interest, I need a profit. So that risk will be there. If I'm not having adequate profit, financial risk is there, I may not be able to pay the interest to the debenture holder. At the same time, debenture having the maturity period. One particular point after one particular year, I have to repay. If I want to repay, I need a huge cash. The entire principal amount I have to repay means I need huge cash. Then, different would be
points second point protective covenants associated may be restrictive now.
Yeah, with respect to issue of debenture, we are having rules and regulation. So that is a disadvantage with respect to issuing the debenture. So just like the econ the portion 2 or to issue the debenture.
Okay.
Difference between preference shares and the debenture. Such is also a +2 level question. Yeah, where are they putting up? Difference between preference shares and the debentures. Who is going to read?
Can I? Sir?
Yes.
Difference between preference shares and debenture. Basis, ownership. Preference share capital is special kind of shares. Debenture is a type of loan which can be raised from a public. Payment of dividend or interest. Its holders enjoy priority both as a regard to the payment of the fixed amount of dividend and also towards the repayment of capital in case of winding up of the company. For debenture, it carries fixed percentage of interest. Basis, nature, for preference shares are hybrid form of financing with some characteristics of equity shares and attributes of debt capital. For debentures are instruments for raising long-term capital with a period of maturity.
So understood preference shares and debentures. So equity share, preference shares, debentures, equity share, preference shares, and debenture. All the three, you should be pakka. Anyone of the question, 2 or 3 marks they may ask on. With respect to bond, 2 types of bonds are there: callable bond and puttable bond. That is also 2 mark question. Great, Ragana, Ruba. Callable versus puttable bond.
Yes, sir. Types of bonds based on calls. Callable bonds. A callable bonds as a call option, which gives the issuer the right to redeem the bond before maturity at the predetermined price known as the call price, generally at a premium. Puttable bonds. Puttable bonds gives the investor a put option, that is, the right to sell the bond back to the company before maturity.
So, the main difference in callable and puttable is what? The main difference between callable and puttable bond is what?
So it can be redeemed before maturity.
Callable is to buy the options, sir.
Right to redeem.
This right to sell the. It
Yes.
has right to sell and it has right to buy.
Good.
Correct?
Correct. Various types of bonds. What are all the various types? Types on Paragana. With respect to foreign bond, what are all the types of foreign bonds?
Yes.
Once they ask 2 more question, types of foreign bonds. Foreign currency convertible bond. Next.
2 plain vanilla bond, 3 convertible floating rate notes, CFRN, 4 drop lock bond, 5 variable rate demand obligations, 6 yield curve note, YCN, 7 Yankee bond, 8 Euro bond, 9 Samurai bond, 10 Bulldog bond.
All the 10 points you have to remember. Okay, I'll share the PDF with you so that you can study. Sometime they'll ask short notes on, okay, Bulldog bond, short notes on drop lock bond. Plain vanilla bond.
Last September Janleo and then the vanilla bond
Vanilla bond.
Masala bond adu ketirundanga and the rendu ketirundanga. Sir, actually இது ஏதாவது ஞாபகம் வச்சுக்கிறதுக்கு ஈஸி டெக்னிக் இருக்கா சார்?
இல்ல 2 டைம் படிச்சா வந்துருந்தாங்க. இல்ல 2 மார்க்ஸ் அங்க.
சார் சின்ன டவுட்டுங்க சார். இந்த ஃபாரின் பாண்ட்ஸ் ஃபுல்லா இது கொடுத்துருக்கீங்களா சார்? இதுலயே யூரோ பாண்ட் வந்துடுதுங்க சார். ஃபுல்லி ஹெட்ஜ்டு பாண்ட்ஸ் நம்ம குட்டி புக்ல கொடுத்துருக்கீங்க. மீடியம் டேர்ம் பாண்ட்ஸும் அது ஐ திங்க் எதுவும் ஸ்பெசிஃபை பண்ணிட்டு இதுல இருக்க மாதிரி எனக்கு தெரியல சார். அதை
சொல்றேன், தனியா சொல்றோம். எஸ், இந்தியன் பாண்ட்ஸ்ல என்ன இருக்கு அது தனியா சொல்றாங்க உங்களுக்கு. இந்த 10 பாயிண்ட் மட்டும் ஃபாரின் பாண்ட்ஸ் நடக்க வச்சுக்கணும்.
Indian bonds, 1 masala bond, 2 municipal bonds, 3 government or treasury bonds.
The 3 bonds with respect to Indian bonds. Next, bridge finance, very frequently asked a question. This question 4 to 5 mark question. 4 mark question or answer. With respect to bridge finance, bridge means what? The connection is called a bridge. Are able to follow or not? Connecting one event to another event, that is called a bridge. Here, bridge finance means what? For finance, by way of finance, we are bridging. That's why it's called bridge finance. In the sense, you are going to start one big project. For that, assume you need 100 crores rupees. You are applying to the bank. You are approaching the bank. For that, whatever the securities, whatever the document, all those things you have provided. Even after providing, is it possible for them to get the loan immediately? Waiting period will be there, right? Because it's a huge amount, 100 crores. They have to verify what are all the document you have submitted, that is also correct or not, they have to verify. So their banker is having their own formalities. Assume they need 6 months for the purpose of, before going to sanction the loan, they need 6 months period for the purpose of verification, other process, inspection process and all. Then out of the 6 months, you may not be able to wait because you have to start the project. So one more loan you are applying. Anyway, all the document I have given for 100 crores worth, whatever the security, surety, everything I have given. But get sanctioning the loan, get what? Accept or reject, we are going to come within 6 months period will there. So meantime, I want to start the business. I am going to approach one more short-term loan. The short-term loan is for the same bank only. The short-term loan is purely for the purpose of what? Bridging the gap between today and the 6th month. Because the 6 months gap is there. 6 months gap is there. Okay. During the period of 6 months, I don't want to wait. Clear? For that purpose, I am getting one more loan. Are you able to follow or not? For example, 100 crores I need. Okay, big loan. For that, I need a 6 months period. After 6 months only, I am going to get the sanction. Clear? After 6 months period, I want to start the business. I need some fund to know. I am going to apply one short-term loan. For example, I need 2 crores for the purpose of continuing the business for 6 months period. So I am applying one short-term loan for 6 months period. Then for the same bank only. Already I given all the enough certificate, all the enough surety, security, everything for 100 crores itself. So out of his releasing 2 crores is easy or difficult from the bank side? 100 கோடி ரூபாய்க்கு loan apply பண்ணிருக்கேன். Now urgently need 2 crores. Is it possible for them to release the 2 crores easy or not?
Easy.
Comparatively easy, because I have given surety assurance for 100 crores itself. Am I right? So if I am going to get 2 crore rupees, for example, I am telling you 2 crore rupees. After 6 months, all the paperwork, everything is over, documentation, everything over. Yes, they are going to sanction 100 crores. Out of 100 crores, before they are going to sanction, the 2 crores they will reduce because already they given the loan, right? Short-term loan. Plus, for that, whatever the interest for the 6 month period also they will deduct. Therefore, the 2 crores is a bridging from today to 6 months period, right or not? Before they are going to sanction the main loan, I am getting one more loan. The loan is what? Finance. One of the finance bridging the connecting from one finance to another finance, one period to another period. That's why it's called one bridge finance. Got the clarity, my dears?
Yes, sir.
Yes, sir.
So understood the terminology why it is called bridge finance. Sir, yes. Yeah. Rakesh, kindly read. Pick up.
Sir. Okay, sir.
Bridge finance. It refers to loans taken by a company from commercial banks for a short period pending disbursement of loans sanctioned by financial institutions. Normally, it takes time for financial institutions to disperse loans to companies. However, once the loans are approved by the term lending institutions, companies, in order not to lose further time in starting their projects, arrange short-term loans from commercial banks.
Short-term loan from commercial banks. So the bridge finance comes under the short-term loan.
Bridge loans are also provided by financial institutions pending the signing of regular term loan agreement, which may be delayed due to non-compliance of conditions stipulated by the institutions while sanctioning the loan. The bridge loans are repaid or adjusted out of the term loans as and when disbursed by the concerned institutions. Bridge loans are normally secured by hypothecating movable assets, personal guarantees, and demand promissory notes. Generally, the rate of interest on bridge finance is higher as compared to that on term loans.
Always remember short-term loan means interest will be high. Long-term loan means interest will be less. Understood?
Yes, sir.
Characteristic. Yes.
Characteristics. It is a short-term loan. It bridges the gap between the date of sanctioning the loan and the final disbursement of loan. The rate of interest on such loan is usually high. These loans are usually repaid as and when the term loans are disbursed. Advantages. It helps in avoiding the cost overruns. Such loan is useful to implement the projects on time. Disadvantages. The rate of interest on such loan is very high.
Next, venture capital financing. With respect to venture capital, venture represent what? Highly risky project. New venture. Clear? Highly risky new venture is called what? Venture. Venture means what? Risk factor நிறைய இருக்கும். So new or unique business I am going to start. Clear? So for that purpose, they are going to provide loan. That is called what? Venture capital financing. For example, I am having new idea. Out of herbal, I am going to create a petrol. It's a new idea. Some thought process has come. Idea may have, I may be what, going to do the work, but I need a fund. So fund may not available. Okay, I may have the idea, you may have the fund, both of them join together. Whatever the fund I'm going to collect from you, that is called what? New venture capital fund. Are you able to follow or not? Clear? So one new venture I'm going to create. If I'm going to convert the herbal, out of herbal I'm going to take petrol. It may click or may not click. Therefore, risk factor is high. Right? It requires some research work. Further, you need an adequate fund also. So huge fund I need. That's the reason it comes under the venture capital financing. Are you able to follow or not? Now, how we have to get the fund? For that purpose, we are having types of venture capital. One is called equity financing, conditional loan, income note, and participating debenture. Equity financing represent what? Yes, I am having idea in the venture panna super profit pandalam. Okay, if I'm herbal is there, I know I'm a scientist. I know how to create out of petrol out of the water. The chedi lend edukka mudiyanaala. Clear? If I'm having some idea, but somebody has to invest the fund for factory edukkalam. Clear? So I am having idea. Rajagopal sir going to invest the fund. So if he is going to invest the fund, that fund is called venture capital. In a venture, new venture, risky venture, risk factor is high. That's why it's called. It's a venture capital. So capital kudukkurar. Either I can be participating as a shareholder, equity share kudukkalam. Nothing but what? 51% I may have substantial, remaining 49% sir. So that I can get the fund by way of giving. Rajagopal sir going to give the fund out of equity shares. Therefore, he is going to be a shareholder. Are you able to follow or not? Or shareholder means another risk is there. Yeah, only if I am going to earn profit, I will pay dividend to the shareholder. Am I right? Suppose he is not preferred. I don't want to what? Buy your shares. Clear? But share and the dividend on the clear? It's the risk is very high. So investor's point of view, risk is high. Then conditional loan. What is called conditional loan? If it's going to give you as a loan, Rajagopal sir will get only fixed rate. Am I right or not? Interest is a fixed rate. But I may going to earn more and more profit. The petrol has been created. Then I can get more profit. Am I right or not? He may going to have the conditional loan. What is the loan? Loan mari and interest on fixed amount on. You have to give the royalty. Royalty is based on turnover. Am I right? So once the product has maturity, I am materialized. I am going to sell the herbal order. I am going to sell the what? Petrol. Then out of turnover, I have to pay some royalty. Then investor are going to get huge income. Am I right or not? That is called what? Conditional loan. Loan and a condition. Generally, loan means interest you have to pay. Here's some condition. Instead of interest, they are asking you to pay royalty. Got the logic or not?
Yes.
Then income note. Income note represent what? Combination of interest and royalty. A conditional loan, only turnover happens. Sale ahamboda, royalty will get. Am I right or not? During the period of what? Research time, during the period of what? Marketing time, and the time royalty may not be there. Am I right or not? Because sales are there. Therefore, partly interest and partly royalty. Combo offer. Are you able to follow or not? Up business in even during the research time, he'll confirm that he'll get some interest. And once the sales has picked up, interest plus royalty also will get. So the confirmed income to the investor, that is called what? Income. The last one is called participating debenture. In general, debenture holder not in the position to participate in the company. Right? But here participating debenture means what? Beginning of the phase, during the research page, no interest at all. Clear? He is what? Contributing to me, some sort of what? Help. Second phase, product has been created. Market may not be what? Much click. Then low rate of interest. Market rate 18%, I am going to be only 10% interest. So he is what? Helping me. Am I right or not? Once the sales has picked up, then instead of 18%, I am giving 25%. What is logic or not? So that concept is called one participating debenture. So understood what is called venture capital financing? Types of venture capital financing also frequently asked question. Equity financing, conditional loan, income note, and participating debentures. Then debt securitization. With respect to debt securitization, you know the concept of factoring. We have discussed the factoring, right? So factoring also we are going to discuss. So after discussing the factoring, I'll come back, remind me, I'll come back to debt securitization so that easy for me to complete. Okay. we'll discuss the factoring, thereafter we'll come back to debt securitization. Now, yeah, factoring, very next question is the factoring. Factoring also very frequently asked question. Factoring is a short-term nature or long-term nature? Short-term finance, right? So short-term, it's one of the loan mark, short-term loan. Now, like pledge, instead of giving, by way of giving jewelry, I'm going to get the loan. In factoring, company, they may have debtors in the balance sheet. Nothing but bills receivable from the debtors. Okay. So I'm having lot of bills receivable, 50 lakhs worth of bills receivable, 50 lakh debtors are there. Now I am giving to the factor out of debtor. Another 3 months, I will get the money from the debtor. Sir, today I need money urgently, loan urgently. Out of debtor, give some money. I am giving some proof out of which I am collecting money. Clear? So here 3 parties involved. Person who is going to give the money is called a factor, like bank or a pawnbroker. I am going to get the money, the company. I represent company. Company is going to get the money. That's called a borrower. Out of what I am going to get the money? Debtor or the bills receivable. So the 3 parties involved. Debtors, borrower, and one, the factor. So that's why the procedure for factoring. If you remember the steps, procedure for factoring is easy for you. Haripriya, read the procedure. Borrower.
The borrower sells his accounts receivable, that is book debts, to the factor. The factor purchases the receivables and provides advances against them after reducing and retaining as a suitable margin or reserve, factor commission or fees, interest on advance. The borrower forwards collection from its customers or buyers to the factor and thus settles the advance received by him. The factor may also provide allied service like credit investigation, sales ledger management, collection of debts, credit protection, and risk bearing.
Understood, Kanna? Types of factoring. Factoring is a practical question, also important question. Types of factoring. There are 2 types of factorings are there. Disclosed factoring and undisclosed factoring. Recourse factoring and non-recourse factoring. Disclosed means as a company borrower, I am going to disclose debtor. Out of the bills receivable only, I got the money, borrowed money from the factor by way of factoring. If I'm going to disclose with the debtor, then it is called disclosed factoring. If I'm not going to disclose, then it is called undisclosed factoring. In India, disclosed factoring only valid permitted. Recourse and non-recourse. I have given bills receivable to the borrower. I have given bills receivable to the factor, out of which I borrowed the money. One of the debtor become insolvent, then I have to settle all the money. Okay, I have to settle the liability. Primary responsibility with money. Then it is called recourse factoring. If it is not mean, then it is called non-recourse factoring. I am not going to settle mean, then it is called what? Non-recourse factoring. So in India, recourse factoring only permitted. Therefore, in India, disclosed factoring and recourse factoring only permitted. Next. Now we understand what is called factoring. The factoring summary in the last introduction useful. This is one quick. Haripriya, summary with respect to factoring.
Yes, sir. Factoring. Financial arrangement between borrower and factor. Receiver equal to borrower. Borrower sells its accounts receivable to factor. Sales to sister concern is excluded from account receivable. Factor provides advance amount to borrower after deducting reserve commission interest. Borrower forwards collection to factor.
The reserve commission interest form part of the practical problem itself, right or not?
Yes, sir. Borrower forwards collections to factor. Factor provides allied services, credit investigation, sales ledger management, collection. Types of factoring: disclosed and undisclosed, recourse and non-recourse, quick cash, no need for separate credit department.
Understood, Kanna? So these are all the what? Factoring with respect to factoring. Now, different between factoring and bills discounting, Kanna. I have given the example. By way of bills receivable, I'm going to get the money. The same concept you come across in Negotiable Instrument Act also, bills discounting. Then what is the difference between bills discounting and the factoring? That is also a famous question. Factoring, factoring is called the invoice factoring, whereas bill discounting is called the invoice discounting. Factoring, 3 parties involved. Okay, overall the borrower, factor, and debtor. Okay, the borrower, borrower. That is called a factor. The person out of debtor only and bills receivable, I'm going to get money. Therefore, debtor. Whereas bills discounting, drawer, drawee, payee. Hope you studied Negotiable Instrument Act, right? Then
Yes.
With respect to factoring, in short, at the bottom, it's a sort of management of book debts, whereas bills discounting sort of borrowing from the commercial bank. இது management of book debts னு சொல்றோம். அது என்னது commercial bankல borrow பண்றோம்னு சொல்றோம். Factoring there is no specific act, whereas bills discounting we are having negotiable instrument act. In bills discounting you have a 3 days grace period. This type of grace period is not there for factoring. Now I am going back to debt securitization. With respect to debt securitization, remember, you know you got the concept of factoring. Am I right? Now, I am collecting all the debtors from the various company, like factor. If the factor is going to collect what? Debtors from the various company, no? Out of which only is going to give the money, no? Hello? Irkingla?
Yes, sir.
Yes, sir.
Factor
Yes, sir.
is going to
Yes,
give
sir.
the money out of what? Factor
Collection
is going to provide loan out of
on the debtors.
debtors.
On the
bills
debtors.
receivable, am I right? Like that, if I'm going to get more and more bills receivable, various companies, then the debt I am converting because I have created an asset, am I right or not? By way of debt, I am going to pay the money soon, am I right? Similarly, company A, company B, company C, company D, that debt, I'm having some asset. If I'm having asset, I can issue securities. Am I right or not? Out of that, I'm going to give securities. That asset I'm going to convert into asset pool called special purpose vehicle, like trust
Vehicle.
special purpose vehicle, SPV, special purpose vehicle. Out of the pooling of asset, I am going to issue the securities. If I'm going to issue the securities, become long-term in nature. Am I right or not? So I am converting debt into security. That's why it's called one debt securitization. Got the clarity, my dears? Yeah. Haripriya, the Parrakana. Debt securitization.
Yes, sir. Securitization is a financial transaction in which assets are pooled and securities representing interest in the pool are issued. It is the process by which financial assets, example, loan receivable, mortgage-backed receivables, credit card balances, hire purchase debtors, trade debtors, etc., are transformed into securities. Securitization can take the form of debt securitization, in which the underlying pool of assets is sold to a company or a trust for an immediate cash payment. The company which buys these pool of assets issued securities and utilizes the regular cash flows arising out of the underlying pool of assets for servicing such issued securities. The
Previous point, buddy, securities, securitization.
The company which buys this pool of assets.
Previous. Securitization.
Securities can take the form of debt securitization in which the underlying pool of asset is.
What is called the underlying pool of asset? The debt or whatever the bills receivable, that is called debt, is
Yes.
sold to the company. Am I right or not? Factory debt in bills receivable we are paying, giving, that whatever is sold to the company for immediate cash payment.
Cash payment.
That is nothing but factoring concept. Got the clarity or not?
Yes, sir.
No. Two-way process. Point number one.
The sale of an asset or a pool of assets to a company for immediate cash payments. And point two, the repackaging and selling the security interests representing claims on incoming cash flows from the asset or pool of assets to third-party investors by issuance of tradable securities. The company to which the underlying pool of assets or asset is sold is known as a special purpose vehicle, SPV. The company which sells the underlying pool of assets or asset is known as the originator. The process of securitization is generally without recourse, that is, the investor bears the credit risk or risk of default, and the issuer is under an obligation to pay to investors only if the cash flows are received by him from the collateral.
Now, factoring in a concept with recourse or without recourse?
With recourse.
Here?
With recourse.
Without recourse. Now. Now you can see the difference between factoring and debt securitization. You have the better clarity now. Factoring, debt securitization. What are the difference? Difference between factoring and read யாராவது படிக்கலாம் பேர் சொன்னதான் படிப்பீங்களா
Factoring.
Hmm.
Arrangement under which a firm borrower receives advances against its receivable from the financial institution. Whereas debt securitization is a financial transaction in which assets are pooled and securities representing interest in the pool are issued. It takes from the debt securities when the underlying pool of assets is sold to company or trust for immediate cash payment. The factor purchases the receivables, whereas debt securitization company to which underlying pool of assets are sold, SPV. The firm which sells its receivable is called borrower in factoring. In debt securitization, company which sells the underlying pool of assets, originator. Factoring may be disclosed versus undisclosed, and another is recourse versus non-recourse. The process of securitization in general, recourse.
Without recourse.
Without recourse. Factoring involves transferring debt without transferring them into securities. Debt securitization involves transfer debt after transferring them into securities. Factoring short-term in source of financing. It's a long-term source of financing.
Good. Then packing credit, 2 to 4 more question. Rakesh Padipa.
Packing credit. Packing credit is an advance by banks to an exporter. Any exporter having at hand a firm export order placed by him, his foreign buyer, on an irrevocable letter of credit opened in his favor, can approach a bank for availing of packing credit. An advance so taken by an exporter is required to be liquidated within 180 days from the date of its commencement by negotiation of export bills or receipt of export proceeds in an approved manner. Thus, packing credit is essentially a short-term advance.
Understood or not?
Types of packing.
First, the packing credit is only for the exporter. Okay, for the purpose of export transaction. Okay, one. Then, within what period? 180 days. The period should be what? Within 180 days. Since the 180 days, it's a long-term in nature or short-term in nature?
Short-term in nature.
Types of packing credit.
Pre-shipment finance. 1. Clean packing credit. 2. Packing credit against hypothecation of goods. 3. Packing credit against pledge of goods. 4. ECGC guarantee. 5. Forward exchange contract. Post-shipment finance. 1. Discounting of documentary bills. 2. ECGC guarantee. 3. Advanced against export bills sent for collection. 4. Advance against duty drawbacks.
So if you remember the point, that is sufficient. No need to curiosity to learn more from what is drawback, duty drawback, what is ECG guarantee, that is all applicable for the final only. Okay, you can restrict it to your learning also. Read that. For 2 marks to 4 marks, there is sufficient. Are you with me? Nice response.
Yes, sir.
Yes, sir.
Yes, sir.
Yes, sir.
Yes.
Self-interest in the padingo, but not relevant for the examination. Okay. Seed capital assistance. That is also interesting as well as what frequently asked question. Seed capital assistance. With respect to seed capital, name itself implies the character. Seed in anartham. What do you mean by seed?
Starting. Starting from the beginning, sir.
Seed anartham. Romba kashtamana question agidane.
Viday, sir.
Viday. Seed is called viday. Viday. Right or not? Capital, assistance, somebody assisting you, help pandran. They are giving some capital as a seed to grow. Got the logic or not? Now, somebody finance pandran. That finance is a seed for me to grow. Am I right or not?
Yes, sir.
The finance is a capital. So, somebody giving capital as a seed, assisting capital as a seed to grow. That's why it's called what? Seed capital assistance. Got the clarity? Haripriya, she has cleared a qualified chartered accountant. She thought of what? In her Kanjipuram, she want to start their own audit firm or audit firm. Unlike those days, nowadays audit firm also what costly only. Right? Nalla oru chumma ukanda aarambicha mudiyum. Na Wi-Fi facility venum, online facility ella irukanum, clear uploading ella pandradhukku unakku facility irukanum, some staff you need. Right? Appa minimum bare minimum you need some cost, infrastructure cost theyappadudhu. Right or not? Startup cost theyappadudhu. So you are having knowledge, but to start the business, you need money. Ask பண்ணிட்ட கையில பணம் இருக்காது இல்லையா? ஓகேடா ஹரிப்பிர நீ நல்ல பிரில்லியன்ட் ஆச்சேம்மா. Somebody is assisting. இந்த கேபிட்டல் வச்சுக்கோ பணம் கொடுத்துறான். Start the business. So that is a what seed for you to start. இல்லையா ஒரு விதை போடுறாங்க பணம் கொடுத்து. That's why the seed giving capital as a seed, assisting capital as a seed to grow. That's why it's called what? Seed capital assistance. Or the seed capital assistance only for the professionally qualified persons. Clear? Professionally qualified persons தான் apply ஆகும். Clear? Now you can read seed capital assistance. இப்போ பணம் கொடுத்துறேன் உனக்கு seed capital assistance. Haripriya has started the business. Is it possible for her to gain the profit immediately?
No, sir.
Why? She has to do the business. You have to get the client. Even if you get the client, you have to do the audit, tax audit முடிக்கிறா. Then immediately she won't get the money. Next year தான் கிடைக்கும். ஒரு வருஷம் ஒரு சைக்கிள் போனாதான் she can earn money. மறைட்டார்னா அப்ப immediately she may not be able to repay the money also. She is a professionally qualified person. Of the doctor ஆனாலும் சரி, what chartered ஆனாலும் சரி. Clear? So immediately they may not going to gain money. Clear? Therefore, they will work hard. They will create water. Okay? ஆரம்பிச்சு establish பண்ணுவாங்க. Then they need some sufficient time to give back the money. Therefore, during the period is called moratorium period. அதுக்கு என்ன பேரு? Moratorium period, cooling period. Those period, you no need to give back any repayment of loan. You no need to give interest also. That's logic. Develop after that, after the moratorium period is over, clear, you have to pay along with the interest, normal rate of, you have to settle the loan. அப்ப எவ்வளவு ஹெல்ப் பண்றாங்களா இல்ல somebody is helping like SSI loan மாதிரி. That's why it's called what? Seed capital assistance. Such an interesting question. Yeah. Geeta madam, படிக்கிறீங்களா?
Yes, sir. So, it is only provided by IDBI, sir.
No. Designed by.
Designed by. Seed capital assistance. The seed capital assistance scheme is designed by IDBI for professionally or technically qualified entrepreneurs and or persons possessing relevant experience, skills and entrepreneurial traits. All the projects are eligible for financial assistance from IDBI directly or indirectly through refinance or eligible under this scheme. The project cost should not exceed ₹2 crores. The maximum assistance under the project will be restricted to 50% of the required promoter's contribution or 15%, 15 lakhs, whichever is lower.
Yes.
The seed capital assistance is interest-free but carries a service charge for 1% per annum for the first 5 years and at a rate increasing thereafter. However, IDBI will have the option to charge interest at such rate as may be determined by IDBI on the loan if the financial position and profitability of the company so permits during the currency of the loan.
Okay.
The repayment schedule is fixed depending upon the repaying capacity of the unit with an initial moratorium up to 5 years.
So moratorium period of 5 years. 5 years வரைக்கும் டிஸ்டர்ப் பண்ணலாம்.
For projects with a project cost exceeding ₹200 lakhs, seed capital may be obtained from the Risk Capital and Technology Corporation Limited, RCTC. For small projects costing up to 5 lakhs, assistance under the National Equity Fund of the SIDBI may be availed.
Okay. Now, many students used to get the confusion between the bridge finance and the seed capital assistance. Bridge finance, bridging one element to another element, I said. Finance கொடுக்கிறது இல்லையா? By way of finance, they are bridging the time gap. That is called bridge finance. Bridge finance start with the B. Am I right or not? So it's applicable for business people. B for business. Seed capital assistance. Capital start with which letter?
C.
Assistant start with which letter? C. qualified person only, bridge seed capital assistance applicable. CA is a qualified person, right or not? Clear? So seed capital assistance only for the qualified entrepreneur business, qualified people, whereas bridge finance is for business people, so that you won't commit the mistake. Bridge finance is a short term in nature. இல்லையாடா, ஒரு ஃபினான்ஸுக்கு இன்னொரு ஃபினான்ஸ் ரெண்டு பேர் கொடுத்தா bridge finance. Whereas seed capital moratorium period of 5 years is there. Therefore, it's a long term or short. It's a short for it's a long term. In bridge finance, interest is low or high? High. Whereas seed capital, no interest for the first few years, 5 years. Right or not? With respect to finance, the paperwork, they are charging some 1% is the rate of interest they are charging. Yeah, administration or finance cost. Whereas that concept is not there for bridge finance. Then here, with respect to what seed capital assistance, moratorium period applicable. Bridge finance, the moratorium period concept is not applicable. What's the difference in bridge finance and seed capital assistance? Kana?
Yes, sir.
Just short notes. Deep discount bond, security premium note, 2 mark question, 0 coupon bond. ECB, external commercial borrowing. External commercial borrowing types automatic route and approval route, RBI approval route. Okay. ADR, GDR very frequently asked question. Yeah. Krishnadas, padinga sir. ADR versus GDR.
Yeah. GDR, the depository receipts in the world market are called GDR. The depository receipts in the US market are called ADR.
So America issue panna, that is called what? ADR. Okay. Globally means it's called GDR. Okay.
GDR.
G for global, A for
GDR do not have the voting rights, where ADR may with the or without voting rights. GDR are traded worldwide. ADR are traded in US only. GDR are most preferred due to their easy operations. ADR provides certain stringent rules to be followed, which make it less preferred. The cost involved in the operation of GDR is less than that of ADR. The cost involved in its operations is comparatively high due to formalities to be fulfilled under the US GAAP and SEC.
Okay. So just 5 mark, you have to remember 5 points. ADR only in America, GDR for global. Easier kada? Issued in US market, it's in global market. ADR within one country, therefore with or without voting rate possible. GDR is a global, therefore voting rate may not permitted. Clear? ADR traded only in US, GDR enga vana pannalam. ADR, okay, and ADR provides certain in America always rules and regulations will be right or not. Therefore very difficult to what issue. A lot of rules and regulations are there. GDR clear? Then operating in always in US, expense will be costly. Therefore operating expenses costly in ADR, whereas GDR not that much. So easy for it to remember ADR to GDR. 5 points 4 to 5 points mudiyuma. This our India issue panadha is what? Indian depository receipt. Yes. Sir, Indian deposit sorry, Haripriya padrakam.
Yes, sir. The concept of the depository receipt mechanism, which is used to raise funds in foreign currency, has been applied in the Indian capital market through the issue of Indian depository receipts. IDRs are similar to ADRs or GDRs in the sense that foreign companies can issue IDRs to raise funds from the Indian capital market in the same lines as an Indian company uses ADRs or GDRs to raise foreign capital. The IDRs are listed and traded in India in the same way as other Indian securities are traded.
ADR, DDR is a frequently asked question. At the base bunny, IDR. There can take like 2 marks, at least what? Each always remember theory. Each point carries half mark. Okay, not always half mark, roughly half mark. So then 2 mark question, you have to at least write 4 points so that you get full mark. But the clarity or not? Now, plugging back of profit, the most important next one. With respect to plugging back of profit, company earned profit. You know the formula for DPS. What is the formula for DPS?
EPS into dividend payout ratio.
EPS into dividend payout ratio. You know, sales minus variable cost is equal to contribution minus fixed cost is equal to EBIT minus interest is equal to EBT minus tax is equal to EAT minus preferred dividend is equal to earnings available to equity shareholders. Earnings available to equity shareholders, assume 100 lakhs cash fund. Now, all the 100 lakhs if I am going to give to the shareholders, then how the company will grow? Company has to invest the fund. Only in capital structure theory, the assumption possible. Everything has been disposed. Practically, it's not possible. So, if all the amount has been disposed, it's very difficult for the company to grow. Therefore, part of the amount we are going to transfer to retain earning. Transfer to what? Resource and surplus retain earning. Remaining part only are going to distribute as a dividend. Out of 100 lakhs, assume 60% is transferred to dividend, or what is it called? Retain earning. Remaining 40% is equal to I'm going to pay dividend. Therefore, dividend payout ratio is equal to 40%. Retain earning is equal to remaining 60%. The 60% retain earning is there, no? That concept, why I'm retain earning? Earn panna retain money. That's why it's called retain earning. Retaining my earning. That's why it's called retain earning. I am not giving to the shareholders. It is for the purpose of what? Wealth maximization.
Investment.
Clear? I'm investing that fund in the 60 lakhs. I may going to purchase one more machinery because I have to satisfy more and more demand. If I'm having money, why should I borrow from others if I have my own money? Understood or not? Therefore, it's very quickly I can invest the money. Complication also less. Clear? Procedures also less. There is no extra cost involved. Otherwise, commission, interest, finance charges. I can immediately, I am having 100 lakhs, 60 lakhs. Tomorrow itself you can buy one new assets so that you can produce the profit. But today I am not going to give the money to the shareholders as a dividend full amount. Part of the amount 40% I am giving, but remaining 60% I am investing so that it's a wealth maximization concept. Yes or no? Shareholders' wealth I am going to maximize because next year out of the investor asset also I am going to get more profit. That profit goes to whom? Ultimately to the shareholders. Got the clarity or not? The same thing we have discussed in dividend division also. Am I right or not? Comparison of what and what? R and K. Am I right or not? Our return is higher than KO. What to do? Or the dividend payout ratio? R is greater than KO. In dividend division,
0.
R is
payout, sir.
Then 0 dividend. Yeah, optimum dividend payout policy is equal to 0. R is less than KO. 100%. So that concept is based on what? Plugging back of profit. Ultimately, what? Maximization of profit is that. Maximization of shareholders' wealth is that criteria. I am having fund. That fund I am going to, out of 100 lakhs, 60 lakhs I use paniக்கிறேன். It's called what? Self-financing. என்னோட பணத்தை நான் யூஸ் பண்ணிக்கிறேன். Instead of getting finance from others, I am having profit, earned profit from the company. Out of it, 60% I am transferred to retain earning. Namakku naame thittam. I am using my own fund. That's why it's called what? Self-financing. Got it? What is called plugging back of profit? Plugging back of profit now.
Yes, sir.
Interesting concept. Frequently asked question.
Okay, sir.
Kailash Patrakan.
This phenomenon under which the company does not distribute all the profit earned, but it retains a part of it, which is reinvested in the business for its development. The retained portion of profits is known as retained earnings. It is a technique of self-financing. It is a source of finance which contributes towards the fixed as well as the working capital needs of the company. Under this phenomenon, a part of the total profit is transferred to various reserves such as general reserve, reserve for repair and renewal, secret reserves, etc. The funds so created entail almost no risk under the control of the owners is not diluted. Advantages: since the company does not depend upon external sources, flowing back of profit or retained earning acts as an economical method of financing. The retained earning helps the company to pay the dividend regularly and enhances the credit worthiness of the company. Company with the large reserves can withstand the shocks, trade cycle, and the roll-ups. and the uncertainty of the market with this. It allows the financial structure to remain flexible. It makes the company self-reliant. It need not depend on outsiders for the page. For the financial needs. And disadvantages. Flowing back of profit may lead to overcapitalization. The retained earnings may be misused by investing in non-profitable areas. With the help of retained earnings, the company may expand to an extent beyond control. Excessive retention of profit may lead to high satisfaction among the shareholders.
Next. Another 2 more questions. 3 principles related to selecting of marketable securities. Before you are going to select the marketable securities, what are the 3 principles you have to remember? Safety, maturity, and marketability. Before you are going to buy one shares or mutual fund, shares safe or right? Safest investment or not. Maturity period you are going to verify whether premium any advantages there are, and whether tradable or not. The 3 things we have to verify before you are going to invest the fund in marketable securities. Then floating rate bonds. Haripriya, padi.
Yes, sir.
Even many questions 2 mark or 3 mark, don't omit. If a 2 mark or 4 point easy aidina mudiyum, right? Or 10 mark question score பண்றத விட 2 mark question easily can score, right or not? So அதனால கொஞ்சம் concentrate பண்றாங்க. Yeah, right.
Floating rate bonds. These are the bonds where the interest rate is not fixed and is allowed to float depending upon the market conditions. These are idle instruments which can be resorted to by the issuers to hedge themselves against volatility in the interest rates. They have become more popular as a money market instrument and have been successfully issued by financial institutions like IDBI, ICICI, etc.
Or question the 2, what are the 2 sources of long-term finance for the partnership firm? A simple question only. Yeah. Sarana, படிக்கிறீங்களா?
Sir.
From either loan வாங்கலாம் இல்லையா? If you are the partnership firm, it's available to all, not only for the firm. You can get the loan, long-term money by way of long-term loan, or lease finance is possible. Clear? What is lease finance? We are going to discuss separately. So next, what are the sources, short-term sources of fund? What all the ways are there? Trade credit. You know what is called a trade credit? 2/10 net 40 trade credit. Accrued expenses, deferred income. Accrued expenses is what? Income. Accrued expenses is what? Expenses to be paid but not paid immediately. That is equal to a loan more than. Option A, I am getting 1 lakh loan from Kailash, short-term loan, 3 months. Option B, I have to pay some money to the purchaser, share what that called, buyer, person, sorry, creditor. Creditor, I have to pay the money. Robust is raw material, I have to pay money. 1 lakh worth I have to pay. So 3 months cash tarendra. Both are same only, no. Getting 1 lakh for the 3 months or 1 lakh payment I am withholding, okay, outstanding. That is all. Both are equal only. Therefore, accrued expense is also one of the short-term source. Deferred income, okay. So accrual expenses or deferred income. This all comes under what? Short term. Advance from the customer, commercial paper, treasury bill, okay, CD, okay, certificate of deposit, bank short term advances. Clear? So idu mari kuti items ame enna varum? Even short term public deposit, okay, intercorporate deposits, financing of export trade by the bank. Idala short term money we can get, short term loan we can get for the purpose of doing the business. Angel financing concept. With respect to angel financing, you may have the idea, okay, unique idea. Now the startup for that somebody going to sponsor the money, okay. Those people are called the angel because they are giving money for your idea, okay. So that's why it's called angel financing. Now it's for angel finance. Clear? Such a simple theory, 2 mark theory, okay. Robust.
Yes, sir. Angel financing is a form of an equity financing where an angel investor is a wealthy individual who provides capital for a startup or expansion.
Angel investor, wealthy individual, okay, who provide capital for startup
or expansion in exchange for an ownership or equity in the company. Angel investors have a ideal cash available and are looking for a high rate of return than what it is given by the traditional investment. Typically, angels, as they are known as, will invest around 30% to 70% to help the company to get started. This source of finance sometimes in the last option for the startup, which does not qualify for bank funding or too small for venture capital financing.
Understood?
Sir, இந்த வாட்டி MTP 2 ல கொடுத்திருந்தாங்க சார் இந்த question.
Next, this question they may touch environmental, social, and government linked bonds. Muthu padrakana.
Environmental, social, and governance linked. Okay.
Yes, carry.
These bonds carry a responsibility of the issuer company to prioritize optimal environmental, social, and governance factors. Investing in ESG bonds is considered as socially responsible investing.
That is more important. Like socially responsible investing. அதாவது எங்கேயோ பணம் வேணும் இன்வெஸ்ட் பண்ணல. If it is a share trading, that is also investment only. But அதுல ஒரு social responsibility இருக்குமானா டவுட் தான். Right or not? Clear? But here ஒரு environmental friendly ப்ராஜெக்ட்டுக்கா இன்வெஸ்ட் பண்ணுறோம். கீதா மேடம் ஓகே ஆர்கானிக்கா ஏதோ ப்ரொடியூஸ் பண்ண போறாங்க. ஃபார் தட் ஷீ நீட் மணி. கிளியர்? அப்போ ஆர்கானிக் கார்டனிங் போடுறாங்க, பெரிய லெவல்ல பண்றாங்க. ஃபார் தட் ஷீ இஸ் கலெக்டிங் மணி. இஃப் ஐ எம் கோயிங் டு இன்வெஸ்ட் த ஃபண்ட், எனக்கு ரிட்டர்ன் கிடைக்க போகுது. லைக் மார்க்கெட்ல பண்ற மாதிரி ரிட்டர்ன் கிடைக்க போகுது. பட் when compared to invest in somewhere, if I'm going to invest in Geeta Madam project, then எனக்கு ஒரு சாட்டிஸ்ஃபேக்ஷன் இருக்கு. நல்ல விஷயத்துக்கு பணம் கொடுத்துருக்கோம்ப்பா, இனி அதுலயும் ப்ராஃபிட் வருது. பட் I'm earning profit out of what good cause to the society. That's logic or not? அப்ப environmental friendly, plastic free zone இருக்கிறது, clear, carbon credit, carbon footprint குறைக்கிறது, இதெல்லாம் இது மாதிரி ப்ராஜெக்ட் கொடுத்தாக்க it will be more useful for more what social obligation. So socially responsible investing, that fund is called what? That sort of bond is called what? ESG bond.
ESG bonds can be project based, green bonds, and social bonds, and target based sustainability linked bonds, SLBs. Types of ESG bonds: 1. Project based, under project based, green bonds and social bonds. 2. Target based, under target based, sustainability bonds, SLB.
Okay.
Bonds. These are
okay. Definition of proportion. Seriya? So what is green bond, social bond? Now got the overall idea about what is environmental, social, governance.
Yes, sir.
Lease financing. You know the concept of leasing, right? It avoid immediate cash outflow, huge cash outflow. We can do the business. That is called what? Lease. I said, Haripriya want to start the audit firm in Kanchipuram. For that, you need an office. Office purchase panuna, it's very costly, right? At least lease that is called lease. Therefore, comparatively, cash outflow will be less, right or not? So lease rent to so it will be more useful for the purpose of starting the business. Okay, lease finance. Substantial cash outflow will be stopped. Either persons are called lessor and lessee. Clear? Two parties involved, lessor and lessee. So, Padragana. Haripriya padi.
Yes, sir.
Rakesh padigiriya? Padragana.
Okay. Lease financing. In general, owner is having the right of an asset, but in lease financing, right to use the asset, that is getting the rights from owner. Lease financing is an alternative to the purchase of an asset out of own or borrowed funds. Lease is a contract between the owner and the user of the asset over a specified period of time. The asset is purchased initially by the lessor leasing company and thereafter leased to the user lessee company, which pays a specified rent at periodical intervals. The lessee pays a specified
is a owner, lessor is a owner, lessee is a user. Lessor is a owner, lessee is a user of the asset. Up lessee has to pay money to lessor. Understand logic or not? User has to pay money to the owner.
The lessee pays a specified rent, lease rental charges at periodical intervals as consideration for the use of the asset. This constitutes the income of the lessor. Lease finance can be arranged much faster as compared to term loans from financial institutions. From the lessee's point of view, lease has the attraction of eliminating immediate cash outflow, and the lease rentals can be deducted for computing the total income under the Income Tax Act. As against this, buyer has the advantages of depreciation allowance, including additional depreciation and interest on borrowed capital being tax deductible. Two types of lease. Lease may be categorized into following ways. Operating lease.
Operating into
These
finance
payments
lease
by way of
operating into finance lease are more popular. Okay. Operating versus finance lease. Try to understand the operating into finance lease before you are reading. Okay. Operating lease and finance lease can be not different. Both are lease only. Now, assume I am the owner of the property. எனக்கு ஒரு வீடு இருக்கு. Okay. Now, Rajagopal sir, she need rented premises. வீடு கேட்கிற வாடகை கேட்கிற. I am letting out the property. So Rajagopal sir is a tenant. Hariharan sir is a owner. I am the owner and Rajagopal is the tenant. Now, can you please tell me, is it possible for the Rajagopal sir to do alteration in my home? Double bedroom இருக்கு, ஹால் பெருசா இருக்கு, இன்னொரு ரூம் மாத்தி போன் மாத்த முடியும். ஒரு ஆணி அடிக்கினா கூட ஓனரை கேட்க மாட்டோம் இல்லையா? It's not possible for them to change the infrastructure. Right? If there is leakage, ஏதோ ஒரு பிரச்சனை இருக்கு, that expenses who has to bear? Tenant has to bear or owner has to bear?
Tenant.
Owner.
I am the asset owner of the asset. Okay. So the பிரச்சனை நான் he is paying rent, no? Therefore, it's my duty to want repairing work நான் பண்ணி கொடுக்கணும். Clear or not? ராஜகோபால் சார் சொல்றேன், சார் வீடு நல்லா இருக்கு சார், நல்ல லொக்காலிட்டியில் இருக்கு, வேணா கொடுத்து நானே பர்ச்சேஸ் பண்ணிக்கிறேன் அப்படின்னு சொல்லணும்னா என்ன ஆகும்? That's the last month for them. மறைட்டானா வெளில போய் அமுச்சு விட்டுருவோம். So அப்ப tenant not having, they have the decency, they should not what get in the purchase product and property purchase பண்றேன்னு சொல்லக்கூடாது. மறைட்டானா yes or no பண்ணோம்?
Yes.
This is the respect to what? This is the normal. Second scenario, I am having property. That property is there in T Nagar, commercial place. Next to Pothis, and or Ranganathan Street. Then our Rakesh is coming. Sir, I want to do some business. Jewelry shop. Can you please give your premises? Yes, now can you please tell me, Rakesh will use my building as it is or after doing a lot of renovation? Just like the clear. Unless normal property, use பண்ண முடியாது. If Rajagopals are not having the right to what? Do the renovation. But Rakesh he has to do the renovation. Am I right or not?
Yes.
Renovator asset, who has to claim the depreciation? Rakesh or Harirana?
Rakesh.
And that's logic or not? Clear? He won't get. Then, during the period, if there is what? In the repair work line, who has to bear the expenses? Rakesh or her owner?
Rakesh.
Tenant only.
Rakesh.
Suppose அதுவும் ஒரு போத்திஸ் மாதிரி பெரிய ஷாப் ஆயிடுது, then he may have the right to ask, sir, whether I can buy the property or not. கேட்கலாமா இல்லையா? என்ன மார்க்கெட்
கேட்கலாம் சார்.
Because that may going to become landmark. எப்படி போத்திஸ் ஒரு லேண்ட்மார்க் ஆகுது, கிளியர், சரவணா ஸ்டோர் ஒரு லேண்ட்மார்க் ஆகும் மாதிரி யுவர் கம்பெனி மே பிகம் லேண்ட்மார்க்கா இருக்கலாம், பெரிய கடையா இருக்கலாம். Then he may have the chance to buy the asset itself. Am I right or not?
Yes, sir.
ரெண்டுமே ஓனர் அண்ட் டெனன்ட் ரிலேஷன்ஷிப், பட் கான்ட்ரரியான points are. Am I right or not? The first one, myself and what? Tenant, owner and Rajagopals are tenant, is called operating lease. Whereas second case, myself and Rakesh is doing some business, then it comes under finance lease. Now got the clarity between operating and finance lease, Kanna?
Yes, sir.
Yes, sir.
Different between operating and finance lease, but better operating. Now, Rakesh Padipa.
Difference between operating and finance lease. Operating lease, finance lease, basis meaning the lessee is only provided the use of the asset over a certain period of time. Finance lease, the risk and reward incident to ownership are passed on to the lessee. The lessor only remains the legal owner of the asset. Substance over form. Cost of repairs. Lessor bears cost of repairs, maintenance or operations, whereas in finance lease, the lessor enters into the transaction only as financier. He does not bear the cost of repairs, maintenance or operations. In the case of operating lease, risk is incidental to ownership being wholly to the lessor. Lessee bears the risk of obsolescence in finance lease. Termination of lease, as the lessor does not have difficulty in leasing the same asset to other willing lessor, the lease is kept cancelable by the lessor. Finance lease. The lessor is interested in his rentals and not in the asset. He must get his principal back along with interest. Therefore, the lease is non-cancelable by either party. 5. Payout. The lease is usually non-payout since the lessor expects to lease the same asset over and over again to several users. Finance lease. The lease is usually payout, that is, the single lease repays the cost of the asset together with the interest.
Good. Next important is sales and lease back. That concept you are supposed to know. Sales and lease back. With respect to sales and lease back, we'll take again the Pothys building as an example for easy understanding. I am the owner of the Pothys company. It is a landmark in that particular place itself. Am I right? That's a landmark on this, goodwill on that. Now, everything going smoothly. Suddenly, COVID has come, COVID period. That time, there is no transaction at all. But every company suffered a loss. No? But sales, but we have to pay what? Salary to the workers. Electricity pay, clear? Other obligations we have to what? Bear it. Am I right or not? Income illa, expenses was that. Am I right or not? And maintenance expenses, then there's a huge loss because of what? Salary and other things. அப்போ அவ்வளோ பேர் இருக்கான், ஒர்க்கே கிடையாது, ஓகே, லாக்டவுன்ல இருக்கு, கிளியர். சேலரி கொஞ்சம் குறைக்கலாமே தவிர we can't stop paying the money, right? Otherwise getting back the same worker is very difficult. Yes or no, Kanna? In this circumstance, survival is a difficult. I need a huge cash, then only I can continue the business. Then I have decided, seri panam thevapadudhu, but during the COVID time or during this type of finance financial condition is there, very difficult to get the loan. Am I right or not? Yaru kudukka mudiyadhu. Ena condition itself is not good. Who will pay the money? Am I right? Loan vaangiradhu kashtam. Normal condition we can get the money from the bank, other things. Now I need a huge fund. What to do? Then I am approaching Geeta madam. Madam, you are a wealthy person. I need money from you. But summa kudukka vendam, because its a condition is very worst. I need 100 crores of rupees, okay, to do the business. Appa financial conditions from my company also very difficult. I am having one plan. The Pothys building unga perla eludhi vechirukku. Okay, why don't you help me so that for you there is no loss, am I right? There is no risk factor also, clear? Because I have given the asset to you. But one help, you can give back the asset, allow me to use the assets, because அதை வச்சு தான் நான் வியாபாரம் பண்ணி ஆகணும், அதை வச்சு தான் உங்களுக்கு பேமெண்ட் மற்றதெல்லாம் பண்ணி ஆகணும், clear? I am leasing the asset from you. That is logic or not? Nothing, but till today I am the owner of the building. Tomorrow onwards Geeta madam is the owner, but business going on without affecting that. So if I get 100 crores rupees from you, clear, I can settle all the dues, I can run the business smoothly. That is logic or not? Appa sale பண்ணிட்டு I am getting back the asset as a lease. Till today I am the owner of the asset. Tomorrow onwards I am going to be the tenant. Outside point of view, I am doing the business nice only. I am not what என்னோட goodwill க்கு மத்ததுக்கு எந்த பாதகமும் இல்ல. Why don't you help? Chance இருக்கா இந்த மாதிரி பண்ணலாமா இல்லையா? Since the commercial place ல இருக்கு, you may also need the building. Yes, நல்லது தானே, ரெண்ட் கிடைச்சா நல்லா இருக்கும் இல்லையா? Clear? You may have the what? For you also one of the wonderful business opportunity. Merit or not, invest பண்ணாக்க அந்த பணத்தை. If you are going to buy the asset, yes or no? So both the person can be in the position to win-win situation. நான் யார்ட்டையுமே பணம் ஓசியில கேட்கணும் அவசியம் இல்லை. Nobody will give that time, that particular time. And for you also, there is no risk factor. Geeta madam also, no risk factor. Sale and lease back is called one. Another type of lease. Easier, Kalkana?
Yes, sir.
Owner of the asset, sell the asset.
லீஸ் பண்ணிட்டு அதே ப்ராப்பர்ட்டியை லீஸுக்கு எடுத்துக்கிறது.
ஓனர் நான் வீட்டோட ஓனர்
ட்ரான்ஸ்ஃபர்
இருக்கேன்.
ஆஃப் தி நேம் வந்து நேம் வந்து சேஞ்ச் ஆயிடும், பட் ப்ராப்பர்ட்டியை லீஸுக்கு நம்ம எடுத்துக்கிறோம், கெட்டிங் பேக்.
ஆமா. So that in locality இருக்கணும், இந்த business ஆகட்டும் எதுவும் affect ஆகும், போயிட்டே இருக்கும் business. I will get the sufficient money also. Then leverage lease. With respect to leverage lease, The concept of leverage எப்போ வரும்னு சொல்லியிருக்கேன். The concept of leverage arises only in case of
loan, debt.
loan. Here third party involved. Suppose a post is building வாங்குறாங்கன்னு சொல்லுங்க. Geeta madam nice project தெரியுது, but 100 crores முடியல. She is having only 70 crores. So 30 crores இன்னொரு ஆள பிடிக்கிறாங்க. One more party involved. Then in the lease ல lessor and lessee தவிர இன்னொரு இன்வால்வ் ஆகும். For the purpose of giving fund, then it is called what? Leveraged lease. Got logic or not? For example, Geeta madam want to buy the asset means she need 100 crores. She is having only 70 crores. 30 crores he is buying from Rakesh, borrow from Rakesh. உன்னை நம்பி எப்படி மாத்தாரு? கவலைப்படாது சார், கமர்ஷியல் பில்டிங் வாங்குறேன், அதே ரெண்ட் எனக்கு அவ்வளவு வரும். Out of the rent, lease rent, I'll settle the money. So Rakesh also not having much risk, right? Because out of 100 crores property, 30 crores தான் கொடுத்துருக்கேன். வர ரெண்ட்லேயே உனக்கு more than sufficient for pay back the money, right? So that win-win situation is called what? Leverage lease. Got the logic or not?
Yes.
Sales side lease இருக்கு. சேல்ஸுக்கும் they are going to help me, that is called what? Sales side lease. In general, நான் யார் பிசினஸ் ரன் பண்றோம் அவனை தான் பார்த்துக்கணும் சேல்ஸை. Here விற்கிறவனும் ஹெல்ப் பண்றான், then it is called what? Sales side lease. Open-ended close-ended lease, that is two market. I told with respect to operating the finance lease, myself and what? Rajagopal sir, the link is called operating or finance lease?
Operating lease.
I said to Rakesh, I said,
Finance lease.
who is having the option to buy the asset from me? Purchase asset.
Finance lease.
Then it is called open-ended lease. There is no what compulsory you need to buy. Open வான்னா வாங்கிக்கலாம். But Rajagopal sir not possible. Then it is called what? Close-ended lease. End of the tenure, whether you are having the option to buy the asset mean, that is called open-ended. There is no option to buy the asset mean, that is called one? Close-ended.
Close-ended.
Easier Gagana?
Okay, sir.
Hire purchase and lease. Yeah, Haripriya, sinna question படிச்சோம். Hire purchase and lease.
Yes, sir. Hire purchase, lease, ownership. In hire purchase, the person who using the asset is the owner of the asset and full title is transferred to him after he has paid the agreed installments. In lease, the ownership always vests with the lessor and lessee only gets the right to use the asset. Presence in the balance sheet. In hire purchase, the asset will be shown in the balance sheet of the person using it. In lease, the asset will shown in the balance sheet of lessor. It does not appear in the balance sheet of the lessee. Such asset shall be an off-balance sheet item. Depreciation. In hire purchase, the owner can claim depreciation and other allowances on the asset. In lease, depreciation and other allowances on the asset will be claimed by lessor.
Interesting இருந்தாக்கண்ணா.
Okay, sir.
Yes, sir. So,
With respect to working capital, what all the factors going to determine with respect to working capital? Factors to be taken into consideration while determination of the working capital. எதை பேஸ் பண்ணி working capital determine பண்றோம்? So various production policy, nature of the business and credit policy of the company, inventory policy, market condition, abnormal factors, creditors, what is the supply chain relationship, business cycle எப்படி இருக்கு, level of taxation, okay, what a government regulation, so many things we have to see. Based on that only, we can be the person to fix the working capital. Treasury department, adala more popular question, functions of treasury department, totally how many function? 5 function. Cash management, currency management, fund management, banking and corporate finance. It's very frequently asked question. Clear? Adala paathukom. Cash management, currency management, currency na foreign currency, yeah, foreign currency transaction. Fund management, long term source, short term and medium term source. Fund management. Banking, how we are having liaison with respect to one banking. And corporate finance, merger and acquisition, buyback, all those things under corporate finance. These are all the 5 major functions of treasury department. Float, not the delay is called the float. Delay in the event is called the float. With respect to float, என்னென்ன float இருக்கு? Billing float, mailing float, credit period, mailing float, check crossing float and bank crossing float. I have transferred the goods with it, goods கொடுத்துட்டேன். Thereafter I'm preparing the bill. After transferring the goods, I am preparing the bill. That time gap is called billing float. Bill போடுறதுல உள்ள delay is called billing float. சரி, bill prepare பண்ணிட்டேன். Then I have to submit the bill to my accounts department. They are going to send the courier. அதனால delay ஆகுது இல்லையா, to reach. Okay, that reaching period is called what? Mailing float. Mailing and postal delay is called mailing float. Then you received the what? Check. Product கொடுத்தாச்சு, bill அனுப்பிச்சாச்சு. After you received the check, immediately you won't pay. 2/10 net 14 இருக்கு. அப்ப எவ்வளவு நாள் எடுத்துக்கலாம் maximum days?
40 days.
40 days.
40 days.
40 days credit period. அது ஒரு delay இல்லையா? So after you received the check, before you are going to deposit, you are having some delay. That period is called one credit period. Okay, so credit period over ஆயிடுச்சு. I received a check from you. And the check என்ன பண்ணுவோம்? Accounts department. I have to find out to accounts department. Okay, so I have submitted that to accounts department. Accounts department என்ன பண்ணும்? Yes, that check has been received from which debtor? Debtor value குறைக்கணும் இல்லையா? 10 lakhs he has to pay. Now he paid the check of 5 lakhs, balance 5 lakhs. He has to pass the entry. இல்லையா? That period is called the one check processing float. அப்ப process பண்ணிட்டு இருக்கோம் office. Thereafter, accounts department going to deposit the money to the bank. Banker may going to take their own time. Yeah, they have to what? Collect the money. Then it is called one bank processing float. So these are all the 6 types of floats. Floats is a delay in working capital: billing float, mailing float, credit period, mailing float, check processing float, and the bank processing float. Nowadays, this become irrelevant because all core banking by way of GPay alla pay panna mudiyum. But in spite of that 3 mark or 4 mark, you have to remember. Okay, even though it's a old theory, that's form part of your book. You have to remember. Now, one more question also the frequently question: how to reduce the float? Building float, how to reduce? By way of instant building. Yeah, bill போறது ஏன் delay பண்றீங்க? Goods should not be sent without preparing the without attached with the bill. இப்ப any malls, எங்க சூப்பர் மார்க்கெட்லாம் போனாக்க before you are going to what bill நாம் credit பணம் கட்டு வெளில வரும்போது செக் பண்ணுவோம், security wallet will check am I right or not, whether bill is there or not. So goods should not be in the position to transfer without paying the money, without having the bill. Then it is called one billing float. We can avoid by way of instant billing, immediate billing. Mailing float, ஏன் இந்த போஸ்ட்ல அனுப்பிச்சு delay பண்ணிட்டு இருப்பானு? Clear? By way of fast and economic mode of transmission. So what are the fast and economic mode? Easiest way to communication எது இருக்கு? Instead of post இருக்குங்களா?
WhatsApp,
email.
So the two better way of fastest way of communication in the world is what? One is email, another one is female. Sorry. Okay. So 2 ways are there. Either way of what? Email அனுப்பலாம், or we can send it through fax. ஹரிப்ரியா கோபட்டமா இருந்தது. So email or fax we can send. இது அக்கா குத்திக்கிட்டாங்க, தான் கவனிக்கல இல்லடா ராகேஷ். Next, credit period. How to reduce? Very good, madam. Very good, madam. Present as well. Credit period. How to reduce the credit period? I can alter the credit period. Instead of net 40, I can give 2/10 net 40. Am I right or not? 40 நாள்ல கொடு, but 10 நாள்ல கொடுத்தா என்ன benefit? If you are going to pay within 10 days, you get 2% discount. Based on that, few customers will pay the money well in advance. Therefore, I can reduce that time gap by way of credit period. I can reduce by way of what?
Cash discount.
Cash discount.
Remaining mailing float, check processing, bank processing floats are there. No, those floats I can reduce by way of concentration banking and a lockbox system. Concentration banking and a lockbox system. Concentration banking lockbox system. Concentration lockbox system, common points first of all. I am doing business. I am concentrating. I am in Chennai. I am concentrating where major customers are there in addition to Chennai. Local இருக்குது பெரிய விஷயம் இல்லையா, வெளியூர்ல எங்க இருக்கு? In addition to Chennai, Coimbatore I am having more customer. Hyderabad I am having more customer. Bangalore I am having more customer. So identify the customers. Okay, or where and all I am getting more customers. Then Coimbatore, Bangalore and Hyderabad, I am going to open one branch for the purpose of collection. So concentration of getting money, bank, that is called what? Concentration bank. Collection agent to you or branch chief I am going to appoint, that it is called one concentration banking. Where I am going to open the branch? Only where my major customers are there. Instead of what? A branch. Okay, I am going to approach the local bank itself. in Hyderabad, Bangalore, and what Coimbatore. I'm giving instruction to the what those customers. Coimbatore customer, you have to pay that particular bank in Coimbatore. So banker is going to act as a collection agent for me. For that, they're going to take some commission. Then it is called that is called what? Lockbox system. Understood the difference between concentration bundling and lockbox system? This is for the purpose
So
of
some schools will arrange the bank to collect the fees.
Yes. So it is for the purpose of reducing the gap. That is called what? Reducing the one collection period. That is called one concentration, the lockbox system. The 2 points also, concentration banking and lockbox system also nowadays irrelevant or what, redundant because of what? Core banking, other system long that. Yeah, immediate payment. But even then, questions are asked from concentration, the lockbox system. But simple concept only. Easier kada?
Okay.
The difference in anga open branch or appoint an agent which collect pannu in concentration banking. In lockbox system, banker is going to do
Banker.
That's all. So that we can reduce the last 3 floats. It help both the concentration banking, lockbox system help us to reduce mailing float, check processing float, and bank processing.
Bank processing.
Cash management model with respect to optimum cash balance. One is called J. Baumol's model, another one is called the Miller or cash management model. J. Baumol's model based on inventory type model. Okay, even cash flow. In case of stochastic model, uneven cash flow, Miller or cash management model. Formula for J. Baumol's model, square root of 2A T divided by I. A for
Annual
what? Annual cash.
Annual cash disbursement.
T represent
For transaction
cost per transfer.
Transaction cost per.
I represent interest. Okay.
Interest.
Whereas Miller or cash management model against what? The previous Baumol's model. No. By way of formula and all, you can't the portion identify. So we have to go with respect to one.
Limits.
Yeah. Upper limit, lower limit, under limit. That concept we want Miller or cash management model. Those things we have discussed enough in the regular class itself. Right or not?
Yes,
sir. Frequently asked question.
Yes.
With respect to working capital finance, spontaneous finance and negotiable finance sources. Spontaneous source automatic and the trade credit 2/10 at 40 that also that one sort of source that automatically is coming. Negotiated means by way of what we are going and approaching, we are going to negotiate, out of which you are going to get the source, mean that is called negotiable source. Nigarika, Arthamainda?
Yes, sir.
Aging schedule. With respect to aging schedule, in our company's balance sheet, debtor is there. In the debtor, we are going to calculate the outstanding period of the debtor. Suppose Haripriya is the debtor. Haripriya is a debtor for how many? 3 months outstanding. 3 months. Rajagopal are also debtor. But 6 months of pay panle. Rakesh is also debtor, one of the debtor. He is not paying money for 6 years. Geeta madam, 2 years of panam kudukala. So this all we are analyzing. Now, 6 years Rakesh kudukala. Inime kudukka chance illa. Therefore, if I am going to analyze that type of how many months or how many weeks or how many days or how many years outstanding that the period calculation is called the aging of the debtor. Clear? That is called the aging schedule. Why we need aging schedule? For Rakesh, how many years he has not paid the money? How many years a debtor?
6 years.
Better you can write it off. So bad debts. Then Geeta madam, how many months? How many years? 2 years.
2 years.
I need a regular follow-up. Clear? I can stop. Thereafter, I don't need to transfer any goods. So the future loss I can avoid. Haripriya is a debtor for how many months? 3 months. Okay, Haripriya is a debtor for the 3 months. Suppose you have policy 4 months credit period. Then I should not disturb the debtor. Right or not? 4 months credit period is why you are disturbing that. That will backfire with me. Right or not? Therefore, those people we should not disturb because 4 months mudila. Thereafter only I got to collect them. Understand logic or not? Rajagopal sir, 4 months additional 2 months, 6 months. then I can do the follow-up activity. Okay, I can call and get the money. Few people will, after asking only, they'll pay the money. I have to do the follow-up activity. If I'm going to scheduling the age of the debtors, it will give some better result. Future cash flow I can predict. Suppose next month I need a loan, 25 lakhs loan. After I got after I get the call from Geeta has told her 2 years ago, definitely within a week, 2 lakhs rent. Then 25 lakhs loan become 23 lakhs right? Because I'm going to get the loan money from what? My own debtors. So future cash flow predict or loan decide useful in the aging schedule. Got the clarity or not? Okay. So older the receivable outstanding jasthi there is risk to the company. Understood what is called aging schedule, Rakesh?
Okay, sir.
Yes, sir.
Commercial paper. It's issued at a discount, redeemed at face value. The difference amount is called interest to the benefit to the borrower. Commercial paper. It's a short term in nature. Features of commercial paper: short term 3 to 6 months, and it should be a minimum period of 7 days and a maximum of less than 1 year. Within 1 year plus settle out. It's one of the similar to the promissory note, but it is unsecured, issued at discount, but redeemed at par. Denomination of each commercial paper should be 5 lakhs, and it should not, the borrower should not exceed 25 lakhs purchase primary market. It's subject to stamp duty. Whoever may be investor or and with respect to restriction or loan, commercial paper can be issued up to 100% of the fund based on working capital loan. Remember, working capital means what? MPBF maximum permissible bank. Other maximum restricted to that particular fund only. Before I am going to issue the commercial paper, we have to remember the procedure. Application to RBI. Just like the company cannot be the person to issue the commercial paper, application to RBI, approval from RBI, private placement, and intimation of complaints with the RBI. RBI can intimate. These are all the procedures you have to follow. Decision tree some say with respect to whether you have to credit granting decision tree. Either cash and carry basis means no risk at all. If I'm going to give the loan, risk of repayment, probability of repayment, the probability of non-payment. Non-payment is called bad debts. So income is equal to sales minus cost into probability of repayment is equal to income. Cost is equal to total cost into probability of non-payment is the expenses or cost. So the income minus expenses, net benefit positive means we can grant the loan. Otherwise, you don't need to grant the loan. That concept is called what? Decision tree. I think we did one problem also in the regular class. Forfeiting. This is a new concept, forfeiting introduced in the syllabus. With respect to forfeiting, yarla invar exporter, forfeiter, importer, and importer bank. If you can understand this chart, it's easy for you. Now, with respect to forfeiting, suppose Rakesh is a business person, he wants to export the product. Country. While exporting, with respect to exporting, who is a buyer? Foreign country, the Geeta madam going to purchase the product. Now, there's an order placed by Geeta madam from foreign country. Rakesh is going to transfer the product. But to do fulfill the formality, Rakesh needs some money or not? Shipment to claim the transaction, he needs some money because after it reaches only, he may going to get the money. Fund. Therefore, during the period, he may need money. For that purpose, he is going to approach Rakesh should a bank approach. Okay? The person who is going to give the money, the person who is going to give the money to the Rakesh, that person is called forfeiter. Like factors and forfeiter. You are going to get the money from the proprietor. You are relying, forfeiter, you are relinquishing. Rights that is called forfeiter. Now, to get the money, first you have to collect bank guarantee. That bank guarantee you have to submit to your own bank. Rakesh has to get the bank guarantee and he had to submit the bank guarantee to whom? Your bank, Rakesh. Rakesh is in Coimbatore. He has to give the bank guarantee to the Coimbatore. Whose bank guarantee? Geeta Madam bank guarantee. Got the logic or not? Geeta is a person in outside India, outside the India country. Now, that a purchase order alone may not sufficient. Right or wrong? Individual to individual, that's forgery chance. Okay, sir. Geeta has placed the order from outside country. Then Geeta Madam ko banker because the company from that we are going to get the guarantee. Yes, I know she is my customer only. She has placed the order. For that, we are giving the guarantee. Some guarantee. That bank guarantee you are going to collect. Up two things you are going to collect. Rakesh has to collect one is from contract between Rakesh buyer and seller or contract purchase order. Second one, Rakesh has to collect the bank guarantee from Geeta Madam. Got the clarity or not? Banker has to give the guarantee. Those two documents you are going to submit your bank. Kandipa na export pandra paarunga idhukku proof la vechittu. Then you are going to get some loan from your bank. Rakesh is going to get the loan from the bank. The person who is going to give the loan, that banker is called what? Forfeiter. Now, transaction override. Based on that, you transfer the product to Geeta Madam. Geeta Madam cannot the person settle the money to the Rakesh directly. Through what? Banker. Geeta Madam is a banker. That money has to go to whom? Forfeiter. And loan or sound. Yeah. Through that only the transaction has to complete. So then, both the side, it's a win-win situation. Both of them can be pushing to end the profit. Banker also going to get some commission on that. Okay? So all of them happily they are going to settle or complete the transaction. Got the clarity with respect to forfeiting? Logic. Over time padicha no easy appuring. Padipoma konjam quick. Yeah. Yaar padikiram? Yaar padikira? Rakesh padi.
Forfeiting, meaning forfeit is a French term which means relinquishing a right. Forfeiting is an arrangement of bill discounting in which a financial institution or bank buys the trade bills, invoices, or trade receivables from exporters of goods or services, where the exporter relinquishes right to receive payment from importer. Financial institutions or banks provides immediate finance to exporter without recourse basis, in which risk and rewards related with the bills or receivables transferred to the financial institutions or banks. It is an overseas buyer. Importer can open a letter of credit or other negotiable deferred payment terms. Functions of forfeiting. Exporter sells goods or services to an overseas buyer. The overseas buyers, the importer on the basis trade bills and import documents draws a letter of credit or other negotiable instruments through its bank known as importer bank. The exporter on receiving the letter of credit or other negotiable instruments approaches to its bank known as exporter's bank. The exporter's bank buys a letter of credit or other negotiable instruments without recourse basis and provides the exporter the payment for the bill. Parties involved and benefits. 1. Exporter, quick funding. Forfeiter, forfeiting charges. Importer, benefit is he gets products or services on time. Importer bank, benefit commission.
Interesting.
Yes, sir.
Yield to maturity approach. We did on some also based on yield to maturity approach. Yield to maturity applicable for KD and other cost also. Yield to maturity even for the KD if you are going to take yield to maturity with respect to cost of debt. Normal way of computation of cost of debt with respect to redeemable. Two types of KD is there. One is redeemable, another one is irredeemable. In case of redeemable, 10 years is the maturity period. Then you know the formula KD is equal to interest into 100 minus tax rate plus RV minus NP divided by N whole divided by RV plus NP divided by 2. Now, in that formula, we are not considering time value of money. After considering time value of money, you are going to compute the same KD. That is called what? Yield to maturity approach. With respect to yield to maturity approach, here this is called what? Expenditure based calculation. Similar to IRR computation only. IRR normally we compute based on income based approach. Okay, Gayatri. Now here expenditure based approach. Why it's expenditure based approach? We got the what? Loan for the debentures or loan, and we are going to settle after one particular period of time. Therefore, we are going to pay interest on that during the period. Therefore, it's called what? Outflow-based calculation. Same IRR computation only are going to compute. Low rate and high rate. In between zero is called what? No profit, no loss situation. The similar concept is called IRR computation. Year 0, we are going to get inflow. Nothing but what? I am going to issue the debenture. I am going to get the loan amount. Money amount. 10 years maturity, year 1 to year 10, I have to pay interest every year. I have to pay interest, after tax adjustment, you have to pay. At the end of the maturity period, 10th year, I have to settle the money, my cash outflow. Up year 0, I am getting inflow. Year 1 to year 10, my outflow by way of interest. Year 10, my maturity period, maturity amount with the water, even the premium, whatever the total amount I am going to repay, that's a cash outflow. So based on that, you are going to compute IRR. One low rate, one high rate. You need one positive net present value, you need one negative net present value. In between positive and negative, zero net present value, that rate is called one IRR. That rate is called yield to maturity approach KD. Got it, my dears? With respect to CAPM, you are having two types of risk. One is unsystematic risk, another one is systematic risk. Rakesh, what is different between systematic and unsystematic?
This is also called company-specific risk, as the risk is related with the company's performance. This type of risk can be reduced or eliminated by diversification of the securities portfolio. This is also known as diversifiable risk. Systematic risk. It is a macroeconomic or market-specific risk under which a company operates. This type of risk cannot be eliminated by the diversification. Hence, it is non-diversifiable. The examples are inflation, government policy, interest rate, etc.
So which one is diversifiable, which one is not non-diversifiable?
Systematic.
Unsystematic is diversifiable.
And non-diversible.
Generally, மாத்தி எழுதிறாங்க, careful எழுதிக்கணும். Now, fundamental principles governing capital structure. The fundamental principle governing capital structure, optimum capital structure, same answer only. Therefore, we can discuss optimum capital structure. Same features are easily found. Optimum capital structure. With respect to optimum capital structure, based on that, we solve one problem also. The structure, debt equity ratio remains same. Optimum capital structure. So, capital structure na theriyum. Equity share capital, preference share capital, long-term loan and debenture. So, in which angle it's called optimum? Clear? Debt and equity 70-30 or 30-70. Clear? 90-10. In the equity share capital should be how much? Preference share capital should be how much? Long-term loan should be how much? And the debenture should be how much? That structure is called what? Optimum capital structure. So that structure is called the capital structure. Out of which one is the optimum capital structure? Overall cost, weighted average cost of capital should be less to the company. Right? Benefit should be more to the company. That is called optimum capital structure. But optimum capital structure, theoretically possible, practically appropriate capital structure only possible. Optimum is equal to 70-30. All the companies supposed to have only 70-30. Am I right or not? But company to company, it may going to vary. For me, loan fund may be preferable. For Geeta madam, own fund may be preferable. It may going to vary due to various reasons. Which fund is preferable may going to vary from one company to another company. Am I right or not? Therefore, appropriate capital, appropriate for that particular company, that only preferable. So what are all the selection criteria for features of appropriate capital structure? One is profitability, flexibility, conservation, solvency, and the control. That's profit cost principle, risk principle, control principle, flexibility principle, other consideration. Clear? So profitability, you know what? Because of the capital structure, we have to earn more profit. Flexibility, debt to equity, okay? I can increase the debt or decrease the debt. It should be flexible enough to what? Raise the fund. Conservation, debt should not exceed. If I am going to unbearable, that may go into liquidation. It should be conservation. It has to help us to do the solvency. It should not lead to insolvency. Company close pandra. So for solvency portion, you have to maintain under control. Because of that, I should not lose the control. These are all the 5 principles you have to remember with respect to appropriate capital structure. Very frequently asked the question. What are they? Profitability,
flexibility,
conservation, solvency,
control.
Capital structure theory. With respect to capital structure theory, totally, how many approaches are there? net income approach, net operating income approach, Modic-Lenny-Miller approach, traditional approach, trade-off theory, and picking order theory. Okay. Assumptions under capital structure. 7 assumptions are there for all the capital structure theory. 7 assumptions. You can easily remember by way of 7 no's. Okay. For the capital structure. What are the first no? No preference share capital. In the sense what companies having only debt and equity. There is no preference share. Second one is no capital, no change in capital employed. But capital employed remains same. 100 lakhs remains same. Debt and equity may be 60-40 or 40-60. That's change. Total capital employed remains same. Then third one is what? No retain earning. Whatever the profit they are earning, everything they are going to distribute as a dividend. 100% dividend distribution ratio. No losses. Companies always getting profit. No change in fixed cost or operating risk. It remains constant. No taxation is assumption. Clear? No difference in investors' expectation. All the investors are having same expectation. These are the assumptions under capital structure theory. Net income approach. The method on net income approach, various problems we solved. Value of the firm is equal to market value of equity plus market value of debt plus equity equal to value of the firm. So value of the firm alternative formula, EBIT divided by overall cost of capital, weighted average cost of capital, KO. Upon market value of equity is equal to earnings available to equity shareholders divided by KE. If you can remember this chart, you can understand. KD remain constant. Clear? KD remain constant. KO overall clear? More debt mean overall cost of the company will be come down. Therefore, KD and that will be offset by the KE. Therefore, KD cost of debt remain constant. But cost of debt constant overall cost of the company will come down. Got the clarity or not?
Yes.
Net operating income approach. KO remain constant. Okay, based on that theory. Clear? Because more and more KE K1, KD and KO 1 plus become 1 minus. Therefore, overall cost of the company will not get affected. Approach, with the tax assumption, without tax assumption. Value of the levered firm. Levered firm means what? Loan. The value of the levered firm is equal to value of the unlevered firm underwater. Because if there is no taxation, mean value of the levered firm is equal to value of the unlevered firm in case of no tax assumption. Clear? Therefore, in case of levered firm, in case of with the tax assumption, value of the levered firm is equal to value of the unlevered firm plus tax benefit. What is called tax benefit? Debt multiply with the taxation is equal to tax rate is equal to tax benefit. Based on that, we solve the problem. Right? We'll solve it. Arbitrage process, we have explained where the security value is less, that we have to buy. Where is high, that it can be the portion to sell. Which one you have to buy and which one you have to sell. Clear? So that equilibrium concept is called one arbitrage process. That's a proof on the way of solving the problem. How much excess fund will you have? So low rate mean what to do? Low value company, low rate company, low APS company, what to do?
Purchase.
Buy.
High means?
Sell.
Have to sell.
Business risk, types of risk, business and finance risk. Business risk, I am doing the business. Chance of incurring loss is there or not? Business panna loss or a chance irukka illaya?
Yes, sir.
That is called business risk. Chance of getting loss is called business risk. Finance risk person, I am getting profit, but because of the more and more debt fund, whatever the earned profit I am going to pay as a interest itself. That is called what? Finance risk. Are you able to follow or not? Finance risk purely based on what? The capital structure based on loan abatement. Business risk represent what? Market condition based on business risk. Got it, my dears? And finance risk types. One is risk of cash insolvency and risk of variation in EPS, earning per share. Over capitalization. What is required fund only have to get as a share capital. Clear? Or capital structure. If I'm going to get more and more fund, then that itself going to backfire. That is called what? Over capitalization that leads to window dressing of the company. Trade-off theory. It's a balancing the cost and the benefit is called a trade-off theory. comparative analysis of picking order and trade-off theory பார்த்தா உனக்கு இன்னும் புரியும். With respect to trade-off theory, first we are depending on debt. Thereafter, we are depending on equity. Why? Cost of debt is cheaper than cost of equity. Trading on equity concept. Are you able to follow or not? So that is called trade-off theory. Next, advantage is called picking order theory. அதுக்கு முன்னாடி ஒன்று சொல்றோம். நம்ம internal force first யூஸ் பண்ணிக்கோ. Plugging back of profit பார்த்தோம். Right? We are having our own fund, the self-finance. So plugging back of profit படி first retain any investor யூஸ் பண்ணிக்கோ. You need additional fund. Then you can raise the debt. Last priority you can go for equity. So that overall wealth maximization possible. That is called what? Picking order theory. Leverage, operating leverage, financial leverage, and combined leverage. The comparative box will help you to what? Remember all the points. Formulas various type of formulas. Operating into finance lease, you know the difference, right? Operating lease with respect to what? The operating fixed cost, how I am going to make use. Finance lease purely based on what? Interest component, loan wine amount. Financial leverage is a double-edged sword. Why it is called double-edged sword? If I am going to get the loan, cost to the company will be less or more?
Less.
Overall cost to the company less. But at the same time, more and more debt leads to liquidation of the company. Right or not? Nariya debt unbearable that is liquidation. Up to one particular point of time, I may have the leverage, I may get the benefit. Thereafter, then it may lead to my liquidation. Therefore, it's called a double-edged sword. You should be very careful. The loan fund, we should be very, very careful. How much I have to, where we have to cut, we supposed to. Trading on equity concept, it arises in case of what? Return on capital employed should be greater than KD. Interest loan interest will be less out of money. If I'm going to invest, the return should be high. So return on capital employed should be greater than KD means. Then concept of trading on equity arises. It's also called gearing effort. The chart may going to help you. Trading on equity arises only in case of return on capital employed greater than KD. In this circumstance, I can depend more on debt fund. More debt fund leads to low equity fund. Low equity fund leads to low number of equity shares. Low number of equity shares leads to more EPS, increasing EPS. More debt fund means cost of the company will be less. Cost of the company less means profit will be high. So already we discussed the operating. Operating risk associated with cost structure, capital structure, not cost structure, capital structure. Whereas finance risk associated with one, operating risk with respect to cost structure, finance risk with respect to what? Capital structure of the business. So cost to the company, running expense is called operating risk. Finance is purely based on what? Interest component. Financial analysis, analysis. One is called horizontal analysis, another one is called vertical analysis. So vertical analysis, net profit ratio, gross profit ratio is represent what? Sales GPR comparing sales with net profit. That is called vertically we are analyzing. That is called what? Vertical analysis. 1 year to another year. Last year sales, current year sales. 1 year to another year comparison. That is what horizontally we are analyzing. That is called what? Horizontal analysis. So financial is either by way of horizontal analysis or vertical analysis. Equity multiplier. We solved one problem based on dew point model. Dew point model equity multiplier. What is called the dew point model? How to identify return on equity? With respect to return on equity, as per the dew point model, you have to multiply what? Net profit ratio, multiply with asset turnover ratio, multiply with equity multiplier is equal to what? Return on equity based on dew point model. So net profit ratio, you know the formula. Net profit by sales into 100. Clear? Then, what is the next one? Asset turnover ratio, turnover by asset. Equity multiplier. What is the formula for equity multiplier? Nice response. What is the formula for equity multiplier? No, 2 days before only we solved the problem.
Sir, assets divided by shareholders equity.
So if you verify what cancel ஆயிடும் இல்லையா, net profit as well as equity share capital will be there. Now Rakesh தூங்கிட்டியா? The chart will help you. Total liability consists of equity share capital, reserves and surplus, preference share capital, long-term loan, debenture, and current liability. Equity share capital is also called equity. Where and all equity come, you can consider only equity share capital alone. Okay. Alternate assumptions சொல்லிருக்கேன். Reserves and surplus also somebody will tell what form part of equity. But general assumption is what? Equity represents equity share capital. Equity plus reserves and surplus is called net worth of the company. Company's net worth. Clear? So equity plus reserves and surplus preference share capital is called promoter's fund. Okay. If I'm going to add with what? Long-term loan debentures are called loan fund. If I'm going to add with the loan fund, then it is called capital block, also called capital employed. Capital employed plus current liability is equal to total liability. You know the limitations of financial ratio analysis. Capital rationing. You know the concept of capital rationing. Whenever shortage of fund comes, capital rationing arises. For that purpose, project should be classified into two types. One is divisible, another one is indivisible. Breakable partial investment permissible, then it's called divisible project. Partial investment is not permitted, then it's called indivisible project. In case of divisible project, the selection criteria is profitability index. Based on ranking of profitability index, you have to solve. In case of divisible profitability index. In case of indivisible, you have to selection by way of net present value. It usually interchange the students of divisible and interchangeable. Divisible project, indivisible project. Divisible project 2 இல்லையா, அப்ப profitability index. Indivisible project net present value. Understood logic or not? So 2 க்கு 2 profitability index, 3 க்கு 3 net present value. So ranking எல்லாம் மாறி போடும் இல்லையா, careful இருக்கணும். In case of divisible project, profitability index is a criteria for selection. Indivisible project, net present value is a criteria for selection. அத மறந்துடாத, ஏன்னா இதை பேஸ் பண்ணி practical questions இருக்கும். You know the concept of time value of money. Worth of your rupee received today is not equal to worth of your rupee to be received in future is called time value of money. Today's worth of money is not equal to tomorrow's money. The money value keep on decreasing. That is called what? Time value of money. Reason for time preference of money: risk, preference for urgency, preference for present consumption, investment opportunity, inflation, and capital budgeting decision. Two methods are there with respect to computation of time value of money. One is called present value of future money, another is called future value of present money. In case of present value of future money, you have to solve the problem by way of discounting technique. Future value of present money, you have to solve it by way of compounding technique. Modified internal rate of return. Modified internal rate of return. I am reinvesting the money. Am I right or not? So reinvesting the money for how many years? Suppose 5 years project. First year, whatever the cash flow, that I can have the option to invest in remaining 4 years, 4 more years. Second year cash flow, I can have the option to invest in 3 more years. Third year win another 2 more years. Fourth year win 1 year. So accordingly, the interest rate I am going to change. Accordingly, the time value of money which you clear. Appa 8% win 8 into 8. Okay. Appa double kondu porom. So accordingly, you are going to compute present value of the money. We solve the problem in MIRR also, right? You know the dividends, various types of dividend: regular dividend, extra dividend, special dividend, stock dividend, interim, final, and preference dividend. In what basis they will declare the dividend payout ratio? Hello?
Yes, sir.
Yes, sir.
So dividend payout ratio.
வீடியோ பார்க்க முடியலையா சார்?
என்னமா?
உங்களால வீடியோ பார்க்க முடியலையா? எங்களோட
பார்க்க முடியுது. இருக்கியான்னு கேட்கறது பிசிக்கலி இல்ல, மென்டலி. சரியா? நீ பிசிக்கலி இருக்குதுன்னு தெரியுது, அப்படியே எனக்கு வந்துட்டு இருக்கீங்க. பல பேர் வீடியோ ஆஃப் பண்ணிட்டு உட்காந்துருக்கீங்க. நவ் டிவிடெண்ட் பே அவுட் ரேஷியோ. ஸோ எதை பேஸ் பண்ணி டிட்டர்மைன் பண்ணுவோம்? ஸ்டெபிலிட்டி ஆஃப் பேயிங் டிவிடெண்ட், லீகல் கான்சிக்வன்ஸ் என்ன இருக்கு, வெதர் அடிக்வேட் ஃபண்ட் இஸ் தேர் ஆர் நாட், வாட் இஸ் த மார்க்கெட் கண்டிஷன், கிளியர்? ஸோ வேரியஸ் ஃபேக்டர்ஸ் ஹவ் டு கன்சிடர் பிஃபோர் டிக்ளரேஷன் ஆஃப் டிவிடெண்ட். அதெல்லாம் சேர்ந்தா டிவிடெண்ட் டிக்ளர். Cash dividend one இருக்கு, stock dividend. The bonus share is called one stock dividend. Stock split already we discussed. One share divided into more than one share. Okay, that is called one stock split. 500 ரூபாய் பணம் வச்சிருக்கேன், அது 500 ரூபாயை மாத்துறேன். So instead of one currency, I am having 5 currencies. Instead of one share, it become 5 shares. 500 rupees shares become 100 rupees 5 shares. That is called one stock split. the main advantage with respect to stock splitting, even the small investor can be in the position to participate. But it's expense to the company. Salavu jasti company. Occasional doubt. Now, financing decision. With respect to financial decision, 3 types of decisions are there: financing decision, investment decision, and dividend decision. Object of the financing decision is what? Maximize finance pannakam loan vaangalam. Therefore, minimization of cost. Investment decision, if I'm going to invest, our object is to maximization of profit. And dividend decision, we have to declare, we have to identify dividend payout ratio. With respect to dividend decisions, like approach is there: Walters model, Gordon's model, traditional model, and Graham and Dodd model, and Linter's model. So various model, we solve the problem also. We have to remember the formula for all the models. Clear? The dividend decision is about 3 to 5 mark only maximum they lost. Okay? And the formula, whatever we did in the classroom, those problems are more than sufficient for you. 2 types of categories: irrelevant theory and relevant theory. Approaches comes under irrelevant theory. Whether you are paying dividend or not, value of the firm remains same. That concept is called irrelevant theory. Whereas Walters and Gordon model, relevant theory. Based on that, it will get affect. It will going to affect. Then it is called relevant theory. So, these are all the past exam questions. You have to remember. Enjoyed the session. Useful or not?
Yes, sir.
Yes, sir.
Thank you for your
Yes, sir.
Yes, sir.
So இந்த எல்லா கொஸ்டின்ஸும் பார்த்துக்கோங்க. டிஸ்கஸ் பண்ண ஆல்மோஸ்ட் எல்லா கொஸ்டின்ஸுமே நம்ம அண்டர்ஸ்டாண்ட் பண்ணி ஓன் எழுதலாமா சார்? அண்டர்ஸ்டாண்ட் பண்ணிட்டு கொஞ்சம் நம்ம ஓன் மெஸ் எழுதலாம் சார். அப்படியே
Yeah, one word, sir. No, nothing. Okay, there is no much complication with respect to water. Reproduce the mugga panna எழுத வேண்டாம். Remember the points. Remember, 1 mark is equal to 1 point is equal to half mark. We will get into. So accordingly, you can roughly compare. Yeah. Yes, thank you, thank you. YouTubers also, YouTube students also that. Good viewers also. Naveen, thank you, Kanna. Yes. You can DM. I'll send the PDF also. Sure. Tilaga also. Yes. Happy with the session?
Yes, sir.
Yes, sir.
Yes, sir.
Yes, sir.
Yes, sir.
Happy, sir.
Tomorrow, shall we have how to the preparation strategy, how to face examination strategy?
Yes, sir.
Yes, sir.
Yes, sir.
Enappa?
Sir,
இன்னைக்கு வீடியோ கொஞ்சம் அனுப்ப முடியுமா?
முடியாது.